Alright, what's up, guys? What's up, team? Make sure we're good to go. Tesla, ARM, Coinbase. See if Tesla pulls back and holds 215. ARM, AMD, Nvidia, the news from yesterday. Coinbase, Bitcoin, Mara. I've been up since 5, and for some reason I still can't get things together. I want to look for a short if this market's going to pull back off of, and we're not going to hold 423, 422. I want to see if we get support at 422 on the S&Ps. All right, this line right here. I want to see if we get some support there. So it looks like we're going to take another shot to the upside off the bell. So yeah, and Coinbase is on the list. I was rushing around for, I got a few things on my watch list, but I don't know. I'm just a little frustrated for no reason, I guess. I feel like it's just been taking me longer than it should to come up with a watch list and stuff, and I just, maybe it's because I don't really see anything. So, we just got so the bell just opened up. 217. Now the downside on Tesla would be around 210. But I don't know if we're going to 214 is the area I was looking for the long, which is down here. That's the spot. Let me go to Tesla. We have some data coming out also, guys. It doesn't surprise me that Bitcoin's... I should have thought about that. With Bitcoin pulling back because of... Right, like we said, we seen that the euro was going to pull back. We said that Sunday night. If you guys didn't catch the watch list Sunday night, I told you guys that I would look for the dollar to start pulling back a bit. And it did just that, right? Because, there's reasons for things to happen, and people don't, fully explain it to others like they should. Why last week the 30-year Treasury has such a horrible auction? Well, that's because on a technical setup and what's going on, it feels like the dollar's overdone and the euro's oversold. So you're getting dip buyers there, and where they're taking profits from the U.S. dollar, they're throwing it into the euro, and it's just, you're starting to see a top in rates. All right, so there we are. We made this area rejection. I'm going to look, and I'm just going to walk it down to these two areas from yesterday's close. 422, 433 here seems to be an area of rejection. And then I'm going to look for yesterday's close down at 420 and a half. Spotify was supposed to be one that's on the list. I'm so discombobulated. I don't know what's wrong with me. I really don't. So, here we go. Tesla's pulling back to the downside. I want to know where the Qs are. I mean, that's a nice test of the 200-day moving average as also. So, Coinbase cannot, coin just seems like it can't get over this level. I would need a pullback to at least 80.50. I'll give you guys my watch list, right? Coinbase, pull back into 81. All right, pull back into 81. Now that 81 area is the whole, this from yesterday's pivot high up until this 80.50 level that was support. Alright, so there's the break. There's the breakout, but you're coming into resistance. There's the SPY, just bouncing right out of that level. Here we are, 423.75. It looks like we're marching to. I don't know. Thank you guys for joining us. If you are here, if you guys could hit the like button, subscribe. What I'm gonna do is try to put us on the right side of probability and make us some money today, no matter how I feel, because that doesn't matter. I feel like it's been tough for me to come up with a clear game plan with not knowing where these big cap tech earnings are going to come in at. But if we have rates pull back and um, like oil, we need to know where. So oil's pulling back. That's going to be good for equities, right? That's good for inflation data. That's good for rates. Crude. Let me do crude. Let me go to crude and CL. That's right, CL. Dude, what the hell just happened there? All right, so we're at $85 a barrel. Well, let's see if we can get this to pull back down. Doesn't look like it's going to, though. That's the issue. To me, this doesn't look like a bearish setup. It looks like a bullish setup. This is going to be a bullish pattern here, especially if we stick this. Then we can look for equities to pull back. And there's a pullback right off of that 35,000 level. Yep, 35,000. And what's funny is we just redid these yesterday. We just redid these yesterday. Coinbase is still going, guys. Coinbase is still ripping. What's up, man? How you doing, guys? I haven't talked to you in a while, buddy. I hope all is well. I hope all is well. So let's see here. So if we go back on the S&Ps, now I don't want to miss Tesla or anything because I'm thinking if the markets are going to pull back, I need to pull up the Qs. Let me see if all this stuff is charged. I'm sorry, just give me 1 second. I know I'm all over the place. Let's see here. All right, so that's our two biggest levels that we have, right? On the S&Ps, 425 and 420. That's a $5 range that we're sitting in. Looks like we're coming into a bit of just a minor area of resistance, possible resistance. Mara is still ripping to new highs. I feel like it's a lot easier for me to put that. Let me turn the news and stuff on for us. Spotify was a big one that was on the list, as you guys know, that I was looking forward to play. The they did beat um, Spotify did beat. So come on, give me a 1 minute, and I'm just gonna use the 425 to 420 area as my channel, as we just called out. So here's pre-market highs. See if they hold. All right, Tesla's going, guys. Here is some resistance here on Tesla. I'm gonna watch this 218, and my target for Tesla was 217, and we're already past it. That's crazy. We're already past it, so that trade's already done with. I see. The thing is I was hoping to get a pullback into 214. It went right past 215, and that's my fault for not getting it. You do got some. Watch that volume that's in there. You got a bit of some sellers in there, but we'll see. We'll see what the SPY does at this level. Let me pan this out and make sure that I have everything. 220. 220. 223. 223. Where did I see it? 223. I'm sorry. Let's see here. 223. Okay, there it is. 223. So it's like 222, like just above 222.50, 222.62, 222.75. That was the area I was looking for. Mess around and call it 223. All right, so there's a bit of resistance there, and that was resistance pre-market as well. It's a 5-minute chart. He said Morgan. It's Megan. Or Meg. So I want to watch if the markets are going to pull back just a bit. What do I want to be short? What do I want to be long? Let's look at spot real quick. I don't know if I have any more levels. I don't have any levels here other than the pivot high. Wow. I would say that pivot high then. Alright, so it just went up and filled the gap, and the SPY looks like it's going to pull back. That's a weekly chart. God damn it. Sorry, guys, if you guys are hearing that. I can turn it down. Alright, so let's see what happens here if we reject this double top where we hold it. I kind of want to just keep my eye on like AMD, Tesla, Nvidia, and stuff like that. I was a bit bearish on AMD because of this area I've been telling you guys about. Pull up a 30-minute chart, but there's not much room, guys. I just don't know where the risk to reward is. This should play. This should play.
And about 20 seconds now till the flash PMI data. Manufacturing expected at 49.5. Services expected at 49.8.
There's a nice hold. My target's going to be 425 on the
10
S&P.
seconds.
Just wait for this data to come out. AMD, I mean...
Manufacturing at 50. Services 50.9. Beats on both. Again, S&P Global Manufacturing PMI flash for October. That's a surprise rise to 50 from 49.8. Street was looking for a fall to 49.5. While services, a flash PMI, that rises to 50.9 from 50.1. The Street was looking for a fall into contractionary at 49.8.
50, just above S&P PMI flash, just above. I mean... Look at the
and
chart,
as you would
right?
expect, a knee-jerk hawkish reaction with T-note stretching out fresh lows of recent trade, while stocks also ticking lower, and dollar is strengthening.
How? 50 S&P manufacturing PMI flash. I think this move is just an excuse. I'm gonna be honest, guys. I think that move's an excuse. I really do.
TZOO Travel Zoom shares near the highs now, up about 25% after their better than expected report.
My initial thought was to the downside, but
just keeping eyes on some of the major F crosses. Dollar yen did rise to highs of 149.93.
Okay, looks like
still,
Tesla's trying to hold
of course,
that
a few
level.
pips away from that pivotal 150 level. That has been well defended for several days. Remains to be seen if we look to make a push above it again here. Just keeping eyes on the FX options expiries today, which roll off in 15 minutes. Where for dollar yen, we do have 2.2 billion rolling off between 149.95 and 150. So no, that very much looks in play here. Meanwhile, for euro dollar, currently have dipped beneath that 106 level. Currently just reclaimed it as I speak. Although I do know we have 2 billion rolling off today between 106 and 106.10. And above that, 1.3 billion rolling off between 106.15, 25. But also on the downside, 4 billion rolling off between 105.65 to 105.75. Looks a bit too far away now with only 15 minutes to go.
I was pretty bullish coming into the day, but that seems to be changing real quick, doesn't it?
Looking at some of the commentary in the S&P survey, notes the survey's selling price gauge is now close to its pre-pandemic long-run average and consistent with headline inflation dropping close to the Fed's 2% target in the coming months. Something which looks likely to be achieved without output falling into contraction. That said, the tensions in the Middle East pose downside risk to growth and upside risk to inflation, adding fresh uncertainty to the outlook. We have posted these comments to the headline feed within the details.
I'm curious if we just kind of wonder if we can pull it back into yesterday's close, and kind of just hang out. You know, I don't know if we're going to do much today with big cap earnings on deck. I really don't. And you can tell, look at the volume. It's not bad. It's not bad at all. at all, actually. So I want to see a test here of 422. I want to see us pull it back to 422. And I'm probably going to start looking at some plays here and stop messing around with the mouse and clicking. I might have to start just using one screen. I don't know. Tesla seems to be struggling a bit up here. I think I'm going to take a Tesla short, 214.
And do note Halliburton says it sees lower FY 2023 frac work weighing on next year's US oil output. Halliburton says it sees a big chunk of 2023 US oil activity not repeating in 2024.
1, 2, 3, 4. 1, 2, 3, 4. So you can see that if you were to buy, let's just say $4 out of the money roughly, or 4 spots down on the chain, you're paying a lot more for puts still than you are the calls. Now, obviously, I haven't looked to see where the VIX is at, but that's probably why. Yeah, we're still hanging out, guys. We're still hanging out at this 19 level. Have we... This could be a nice downside day, guys. If we could get a nice bounce on the VIX here. It's starting to turn it into resistance, it looks like.
Coming up at 10, the Richmond Manufacturing Index for October, expecting 3.
Clearly, if the government shuts down in mid-November, that's not great. The good news is it's not really going to impact RTX, right? We're going to continue to build what the warfighter needs every single day. We're going to continue to support our airline customers.
Do note in 10 minutes time at the top of the hour, looking out for the regional Richmond Fed survey.
The
Richmond Fed October survey due at the top of the hour.
Found support at it, you broke it, tried to hold it, broke it, tried to hold it, broke it. We're going to try and hold it again.
Greg Hayes, CEO and Chairman of RTX, thank you for joining us today. Stock's up 7%.
Thank you, Morgan. Thank you, Jim, David.
Morgan, our thanks to you, Morgan Brennan. Take another look at the markets in this early trading.
For the Ags Watchers, the note US Soybean Export Council says Chinese agricultural companies and US commodity exporters signed 11 purchasing agreements worth billions in the Iowa ceremony.
Nice area of resistance right there, guys, on the S&Ps.
The highs now 77.03 following their earnings report early this morning. Shares or last night, that's Lima Oscar Gulf India, 12.5% now. That's LOGI.
Come on, man. Time is working against me here. Time is working against me. So AMD's just holding steady here, y'all. A lot of volume. Some decent volume there for AMD. I just don't know how much, I just don't know how much AMD's going to give you. I really don't. I think like that's you crack that and it's just like your final support level is at 95, but it's not a straight shot to 95. So I could see this holding. Let's see if we get a bounce. SPY's bouncing.
After hitting a high of $2.08.
Fabulous!
That's Indian November Michael.
Being a joy to being a burden. I was afraid I would fall. I called in just one day. I had a shower. I could feel safe.
Yeah, I'm not sure. Qs aren't looking too good, guys. The Qs are not looking too good.
FBYD, Falcon Beyond Global now halted on a circuit breaker at the highs on light volume.
Oh, never mind. It's regaining it. I'm not sure what's wrong with it. It's okay. I don't know. It's acting up on me.
And some more commentary from General Electric CEO Culp, this time speaking to Reuters after earnings, reiterates targeting 20 to 25% year-over-year increase in LEAP engine deliveries in 2024. But General Electric CEO says hitting that delivery goal is not going to be easy. Says all of us have to do more week to week, month to month sequentially to ensure supply delinquencies don't increase. Says there is no silver bullet to aviation supply chain challenges, and they are working as hard as possibly can to deliver to playmakers' expectations as well as keep pace with airlines' expectations.
I think you need to pull it back in here and then go higher. Let's see. Let's see what happens. SPY's struggling. Looks like you're getting a small increase in volume to the upside, but
Thursday, November 2nd. Join CNBC's Evolve Global Summit. Learn how global innovation leaders are adapting and transforming in this new era of business. Register now at cnbcevents.com/evolve.
It's time for Jim and Stop Trending. Halliburton's a conundrum. It's a really great company, but they're talking about completion and production. North America not being that good, and this again is part and parcel. What happened here when you have Chevron buying Hess and you have Exxon buying Pioneer? You heard what Mike Wirtz said yesterday, which is that the companies aren't drilling like they used to, and that's hurting Halliburton. I want to come back from the other side and say after these combinations, you're going to see a lot more drilling, and you let Halliburton come down, but this company will do just fine if oil stays at these prices. So might be an opportunity. Halliburton is historically very conservative, and I think they're being very conservative in their outlook. Yeah. Crude below 85 today. I know, and that's hurting the stock too. SLB had a great quarter. I really think this quarter was every bit as good. Look, I know. Look, we sit here talking about Alphabet and Amazon, but the companies that have been winning have been in the oil patch. That's been the star of this year. There's only if there's a bull market, it's in oil and gas. So I'm not backing away from that thing.
so I'm watching ARM up here, see if the SPY starts to try and turn this area into resistance. It doesn't look like it's going to now. I guess we're going to 425. I'm just waiting for the SPY to pick a direction. It may have just picked that direction there. Pulled back, found support. See if you get some buying here. Pop. Tesla. See, there it goes. Should go to 4. I'm not sure right now. Shit, I don't even know what I was gonna say. I'm still gonna bring one home. All right. So you're getting a nice flag here. Volume is a little bit to the downside. Let's see if this is either a failed breakout. But Tesla is making a nice pennant here, and it's holding above that level. This is going to be a key moment for Tesla here if it can break out. It's got to do it on volume. I don't know if this is going to work for Tesla though. I really don't. I feel like this could be a failed breakout. You get a lot of people sucked into it. 223 was the long side target, but I feel like we can get down to 210 if we do get downside. And there goes the SPY. Unbelievable. We need that extension on that volume there, guys. Like you want like a nice increase in volume to break through the new highs.
Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this. Call for Fisher's Retirement Survival Kit.
That is a very nice bullish sentiment. That's a bullish pattern, like I don't know, guys. I don't
And
know what.
under a minute now.
Right?
So looking
Look at
out for the
this.
Richmond Fed
a
survey. It
nice
does
pennant
usually
there
come a little bit before
with
the top of the hour. So
a nice
short
little
looking out for the
breakout
Richmond Fed October survey.
here. And I'm going to get it. I'm going to play Tesla. I'm going to take it to my target. See right there, there's a nice little bull flag right here. Breaks out and it holds that high a day right there. See how
And
it's
seeing it
holding?
now,
Boom, boom,
Richmond
boom.
Fed Services
Wait for the
Revenue Index
pullback,
negative
buy the
11 in
dip,
October
bang.
versus plus 4 in
See
September.
if we can't take
Richmond
this
Fed
thing to
Manufacturing
223.
Shipments
This is my
Index
target area
up
here.
positive 9 in October versus positive 7 in September.
I need a pullback though. I do. If you guys don't need a pullback, that's fine. You guys do you. But I need a pullback. Alright, so there's our pullback. Trying to. Come on.
Richmond Manufacturing Index 3 versus 5 in September. EBMT Eagle Bancorp, Montana reporting 34 cents.
Shit.
That's Echo Bravo Michael Tango. THFF First Financial, Indiana reporting $1.37.
I am a little I'm a little cautious with this. Just a little bit. It's a nice double top on the SPY. The SPY has volume to the upside here. Yields are kind of mixed. Come on. What I'm trying to do is get this. Come on, I don't want to miss this thing, but I feel like I'm going to. So I'm going to get long I can't get long Tesla. I can't get long Tesla. The Qs are still, the Qs are struggling a bit as well. I'm gonna try and turn this. It's up 3%.
And just seeing some post-earnings comments here from Puma. Just noting they're expanding and recovering in Greater China more than expected.
Right,
We do know
your
there is
next
still
Q,
ongoing
that's a
pressure
beautiful
from the
double
FX
top,
side,
guys.
and they look
That's
for
a
stronger
beautiful
China
double
in
top on the
Q4.
SPY.
Is your return to growth in the US
I'm
and
trying to
China
see
in
what Tesla's gonna do
2024?
here. It feels like it's just holding itself up. Not really worried about what the market's doing. Wow. Beautiful double top. That was pretty. That's a pretty pattern there, guys. Should get yourself a bit of a bounce here. Where is our other target at here?
And some further comments here from 3M. An executive says, in the short run, the company has been able to manage inflation through
Why is
price,
there no-
and if needed, it will continue doing that.
Phil, thank you. Let's get over to Dom Chu. He's got a few other earnings names. We've got so many this morning. Dom, what are you looking at?
It's a real, just the heart of earnings season right so far, getting into the thick of it. So let's talk about Dow Component, Verizon. You guys hit Coca-Cola 3M earlier. Those shares are higher by 7.5% this morning after an earnings beat, revenue beat as well for the quarter, thanks in part to growth in its wireless phone subscribers. And also, by the way, Verizon raising its full-year forecast for that free cash flow that Phil just alluded to for GE. That's leaving some
Tesla's still feeling like it wants to go higher. Man, that was a nice double top pattern there, guys. That was really nice. Okay, there she is. There she is. 422.
profit margins were helped along by pricing discipline, also moderating raw materials costs there, so those shares up 1.5%. Then shares of Logitech solidly higher this morning after the manufacturer of computer hardware, keyboards, headphones, webcams, mice, that sort of thing. Better than expected quarterly results. It also raised its full-year profit and sales guidance. Logitech also said that the board is moving closer towards finalizing a deal on who the next CEO will be there, so those shares up 12.5%. Meanwhile, one of the more volatile early trades has been Spotify. Shares of the streaming audio podcast company lower
Yeah, Spotify would have been a good call. I just didn't
after it reported an
check it out this morning.
revenues that were in line with expectations. Spotify did report 574 monthly active users.
Let's see here.
It also forecast that number to be
I'm not giving up on this morning, alright? It's 10 o'clock.
that also topped estimates. And by the way, be sure to catch Spotify's chief financial officer
It's a really nice, strong rally.
next hour on Squawk on the Street, first on CNBC. And we'll cap things off with a quick check with Pulte Group, the home builder up after profits beat estimates. Revenues narrowly missed, but Pulte was helped along by what else? Continued robust demand for new
Alright, so Tesla's breaking through.
higher mortgage rates.
Going to 423. It's the next target.
Way, guys, grew 43% over the same time last year. So Sarah,
Could see this thing up at 430 before you know it.
That's a lot, Dom. You gotta do all of
I can't take the long. I needed to be on this thing, guys, at 210, or not 210, but 214, 215. Couldn't that way it's you're just going to find you're going to make yourself a better trader if you stick to the plan. I have here written down 214 long, 223 target, 210.50 downside, 217 short, 210 target. That was for the downside. If we couldn't get above this 217 area, and you see we made it support, well, in case we made that resistance and the market had other things in plan, I had a 7-point down move, on Tesla that I had planned out. The overall markets are still weak. So here's ARM. It's still consolidating. You had some news yesterday with NVIDIA.
We haven't seen that in demand for our vehicles, and we've been pretty consistent about that on the retail side as well. So cars also a strong point of demand.
But it has earnings. We're going to get a lot of this. We're going to get a lot of information in the next couple days.
But overall, it's not a disaster.
Not at all.
Where's Coinbase? Is Bitcoin still ripping and roaring at like right now, or is it pulling back? Basic, what's up, man? How you doing, buddy?
BID, Falcon.
All right, there goes Coinbase right to $90.
At the high again.
All right, so the SPY is still holding up. That was a beautiful double top there, but it is not having any. It's just hanging on. You're hanging on to that 200-day, and I feel like we could do this for a while. 225 would be my upside target on the S&Ps.
And services, and they were both strong. I mean, the manufacturing PMI
Where are you going, AMD? You want to go higher?
at 50
I don't want to just start trading and making guesses.
since April.
Uh,
And then services also defied analysts and economists' calls for a slump and was above 50 as well. And the best part of this
yeah,
report
there's just nothing. I don't like AMD right now for some reason.
their slowest pace in 3 years.
It will usually put in a really nice pattern, but it just
Which is the service, even
pops and sells off, pops and sells off.
Yeah, the S&P PMI release is actually worth going through. They say firms were reportedly keen to pass through any cost savings made to consumers in a bid to drive sales.
Hamas
That's the kind
officials
of
can
inverse
call on Arab
relationship to
countries to
pricing
end normalization
waiting
with
for like 2-3 years.
And you do hear a lot of talk about moderating inflation. Kimberly Clark
Hope you guys are doing well this morning. I'm just still.
from commodities costs now.
Let me make sure I'm not forgetting anything. Apple. I don't have any plans to trade Apple though. I don't think.
It's really moderating in the U.S., non-existent in China, for instance, and higher in other markets. So what do you do with all this information? Because everyone's expecting.
I was worried we could have a sideways type of day.
The chart of the day goes to J.P. Morgan and this bar chart of what kind of recession odds are being priced into various markets like equity.
Guess I could go trade Bitcoin names.
Bonds, like high yield bonds.
All right, so there's the break
We have that bar chart. I can show you, but basically.
on the S&Ps.
Not a lot of recession odds are being priced in. I mean, in the 5-year Treasury, none, 0%, 42% in the S&P 500. There's high grade or investment grade credit at a quarter.
All right, looks like Mars could have room up to $12.
We've seen obviously gold prices.
I would watch your first level. You're getting ready to come into it at 11.
Are low, and they're a lot lower than they were this time last
Yeah, this level here, like 10.75, $11 would be the first target for Mara if you're long any of these names.
going the other way. So clearly, there's caution out there.
Man, triple top on the SPY. It's just literally, you can tell how big this earnings is with how we're rejecting off of this level here.
Political footing is worth just noting. Comments from a Hamas official just calling on Arab nations to end normalization with Israel.
Hey there, and we were just pulled from our area with the air raid sirens sounding, the Iron Dome again doing its job here, but it's been an active day over Tel Aviv. We've heard jet fighters, drones, we've seen helicopters moving south toward Gaza. A stepped up whole-scale operation, that's their words as far as the IDF is concerned.
I'm so hungry this morning too.
24 hours, rockets and anti-tank installations, drone staging areas, command centers. The Israeli defense minister still pushing that they are going to do more, saying that this is working for a multilateral operation from the air, ground, and sea. Hamas telling us that overnight they lost, or in the last 24 hours rather, they lost 704 people, the most in a 24-hour period. Again, that according to Hamas. Let's talk a little bit about aid. 20 more trucks moved in across the Rafah.
You are getting some
We know that none of those
you can see how you're getting that increase in selling up here
desperately needed, obviously, but
on the SPY.
is saying that fuel may be
Don't get chopped up. It's not worth it.
water, that it is running very scarce, that the remaining hospitals now
See if we catch a bounce here.
about a day of fuel left. We know that the Palestinian Authority Ministry of Health has said
Again, I don't really have many ideas other than like Tesla, ARM, and ARM is consolidating. I was wanting to short it, but I would wait and see what you do here. We missed this one, right? We were on it. We were on it early. I was just a little early on that move. I want to see how we do here. You start to like just sit here, consolidate it, and then you start seeing it making a move higher.
McCarthy regarding the speaker election says, I think this gets done this week. I think we'll go a number of rounds because of the number of people that are running.
220 or so. What the IDF says is that they are using multiple
Okay.
Said I think Tom Emmer has a real lead here and possibly best poised to bring the company together.
Telegram,
That from former
and sending
House
messages
Speaker.
to the residents of Gaza right now, asking them for any information about the hostages or any information about Hamas.
What are you guys trading today? Do you guys have anything that's got any? You guys see anything that has a nice setup or anything?
Willing to share that information.
Hey, the picture you painted of Gaza
Just an update here from the UAW, just noting that 5,000 General Motors workers in Texas are joining strikes. Just getting us off note there for the UAW strike impacting GM.
News as well. And by the way, nonstop air strikes from the Israel side as well. So the war continues in what is obviously a humanitarian disaster that is only getting worse.
Clearly, Tesla's the winner today. All right, I guess I can catch a $3 upside if it's going to go on that. It's just, you know, I don't know. It's just really tough when it's already up so much. It's really tough to just catch that. The plan was to get long here in this area. And do we have any other data today, even from other countries? I'm not sure if we do. Could make for a boring day. And I'm okay with that. 1 o'clock, 2-year note auction. Yeah, we don't really have much until tomorrow. We had a nice move yesterday. So tomorrow you're going to start getting Bank of Canada monetary policy, interest rate decision. Going to get new home sales, but it's not for us. Retail sales for Argentina, Fed Powell. But this is what I'm really curious to see, right? Thursday. I think Thursday is going to be a day. Thursday is going to be a day. And then tomorrow we'll have Microsoft, day 2. Google, day 2. Because I think they report tonight. And then we'll have GDP. So, the end of this week's going to be pretty huge. It's going to be pretty big. That's what she said. So, I'm excited. I'm not sure if there's any small caps running or not. I want to trade something. I&M looking for, let's see. Oh, you know what, guys? Look at Plug Power. Come on. I thought about some of these names.
Running up and down that field looks tough. It's pitch.
Get way more into what you're into when you stream on the Xfinity 10G network. Welcome back to Squawk on the Street. Coca-Cola shares higher right now, upward almost 3% after beating Wall Street estimates on top and bottom lines and also hiking its full year
I guess you could look at like Charge Point too for another runner. I mean, I don't know if they're running. All right, so there goes Sunrun, guys. Oh, look at that reverse head and shoulders, guys. Look at that. Wow, look at this. I mean, I'll just make it flat, I guess. That's probably the best thing to do.
In other words, figuring out just how much consumers will pay. I mean, as inflation continues to come down, will those volumes go up?
Come on, man. Fuck. I hate my life. I hate this shit. It's so easy for me to fucking start falling asleep. And I had enough sleep yesterday. Alright, so what do we got here? The volume isn't really...
KO, Coca-Cola CEO currently on CNBC. Shares of Coke right now 55.64, up about 2.8%. That's Kilo Oscar 55.60. Falling there.
Alright, so there's another failed attempt to get above 223.79, guys. That's another failed attempt.
Where is the momentum coming from? Because during the pandemic, it was half of the portfolio is at home and people are buying and staying at home.
Let's just gonna mess around and just sit there and... Alright, so here we go. Alright, let's not give up on Tesla. Because like the other ones, I would not look at them and they would do the thing. So why I said I wasn't too... I didn't really trust it was because for a few reasons. Because the markets were struggling to go higher. And I felt like our MACD and RSI we were putting in lower highs. Come on.
James, we're just going to take a quick pause here because we do have some breaking news on the UAW strike. But stay with us for a moment. We'll come back to you, James Quincy. We'll go to Phil LeBeau. Phil.
Just making of post-earnings commentary from the Coca-Cola CEO, ticker KO, just noting they feel good about momentum heading into 2024. That's according to an interview on CNBC.
Come on, I think Tesla's got to test this 216 area. Let's see if we can get a bounce. It showed us a pullback. Because if I were to... And I did fix the 200-day moving average, right? I need to hurry up.
All right, Phil, thank you. 42% shut down in the U.S. Phil LeBeau, we'll continue that conversation, but
Yes, I did.
James Quincy, big earnings mover today is Coke. And James, you were talking about potentially some consumer headwinds on the horizon. I'm curious what's happening in the U.S. because companies have been talking about pressure on the low-income consumer for a few quarters now. Is it getting worse? Is it expanding? What can you tell us?
I don't see it changing radically from what we've been talking about in previous quarters. The lower income consumers, particularly when they're buying for at-home occasions, under pressure. But when people are out and about, the spending is still there. And in aggregate, it's robust still in the U.S. So yes, we expect it to moderate slightly as inflation calms down, and that's likely to come with some moderation of overall demand. But you know, we see it as pretty stable.
And then what about China? James, we were talking earlier when the announcement came out about how it's been disappointing to see the comeback there relative to U.S. and Europe. Any changes in Chinese consumers?
Yeah, clearly the rebound, they reopened for COVID later than everyone else, and the rebound has not been as strong as that we saw in the US or Europe, and it's not really flowed through. I know they're looking at stimulating the market, but what we're really focused on is, okay, the macros aren't quite there yet. We need to focus on rebasing and focusing on what we can do, assuming an environment is relatively low or no inflation, and focus on the opportunities.
Okay, there's a SPY break, guys. SPY is breaking. It's so weird how Tesla is not reacting to the markets at all.
So not much improvement there.
It does not feel like Tesla's reacting to the markets at all.
Packaged food companies are down even worse than that. And I know we've seen this jump in bond yields. But the other story that everybody's focused on is the obesity drugs.
I think it's just something key to pay attention to. It really is, because if okay, there is.
Well, I think firstly, as we stand here today, there's very little data on what's actually happening other than some anecdotal stuff. So there's a lot of projections out there. None of the projections that are out there propose a really fundamental change to the overall structure of the beverage industry. Because I think what's important and distinctive about the Coca-Cola Company and the beverage industry in general, we in particular have been on a journey for those people who want to consume less calories to provide zero-calorie drinks, to have innovation, gather calories in other drinks, and to have
Oh, Amazon was another one.
so we think an environment where people are looking to consume less calories, we can absolutely, we have the portfolio that will fit for that that sort of environment. And indeed,
AMD hasn't moved.
if you want to consume less calories, you could eat less food. But from a
And then you get to this area up here, Amazon could be in trouble.
so we believe we can provide a lot
Amazon's not really moving.
of people who are looking for that. So we don't see at this stage a
So that's a nice setup, right? You have a nice base. It's 1025.
Yeah, I mentioned that quote earlier, but I guess the point is kind of made that you can switch what you drink, and you can switch to water or sparkling water. And in your portfolio, is that as successful as a business that people are ditching brand Coke and Sprite?
well, we offer Coke Zero and Sprite Zero too, so they can have a zero-calorie. What is that commercial for? We have some great sparkling water brands.
It could start going higher. But man, I just think we need to pull it back into this area. I think we could really use a pullback on Tesla. Let me see here, guys.
And on that note, and related or not, alcohol consumption is down, and there are increasing health studies about how it's bad for you. At a time where you've been leaning in more, James, to alcoholic beverages like the Jack and Cokes and other canned or bottled cocktails, are you rethinking the strategy at all?
I just think. Is arm pulling back? So this was our the rejection area I was looking for on arm. It could just sit here and consolidate. Look at this. Look at that bear. Look at that flag from SPY. Look at that. Look at that.
U.S. Representative Sessions has eliminated Toronto House Speaker race that includes President Politico and
And I know there was a drink out this quarter created by AI, Y3000, drink of the future, which I thought was good. Tasted a little like candy.
Is arm frozen or something?
What's it going to take to really scale that?
It's not even moving. Come on, give me another bounce, baby. Give me another bounce, Tesla. Give me another bounce. You can do it. You can give me another bounce.
All right, well, let us know when you figure that out. Keep us posted. James, thank you very much for the time today on earnings.
Thank you.
CEO, chairman of Coca-Cola.
Still to come this morning, the CEO of 3M is going to join us first on CNBC with his outlook for the company when we're back at 2. Dow up 300.
NetCredit is here to say yes to a personal loan or line of credit, even when other lenders won't. Apply online in minutes and get funds deposited the next business day or sooner. Go to netcredit.com. NetCredit. Credit to the people.
Hi, it's Christina again. I'm here to tell you about
The reason I'm not going long SPY is I just don't think you have much room. It could go higher. Could go a lot higher, but especially in a bear market rally.
It's worth just acknowledging some of the further strength that we
If I
have
can get
seen
another
in the
shot at Tesla,
US equity
will
space.
take
Even
a
S&P
short on
now at around about
Tesla.
0.9%, as is the case for the Nasdaq. In terms of kind of some of the things we have been dealing with, that's been a very busy corporate earnings slate, which is potentially driving some of the upside. Do bear in mind, though, it's all about big tech earnings today after hours. The likes of Google, Microsoft, and Texas Instruments all due to report. So again, just to continue the positivity here for the US equity space. It's worth just acknowledging in terms of relative outperformance, Russell leading the way up around 1.3%. And just from a technical perspective, E-mini S&P, that's at 42.75.25. Yesterday's high was 42.80.75.
watch out. Tesla could go higher here. Tesla could go higher.
Go to jacuzzibathremodel.com or call 800-319-4208.
And why I say that is
319-4208.
GM said disappointed by the escalation of the unnecessary and irresponsible UAW strike.
Squawk Box, weekday 6 a.m. Eastern on CNBC
Michael.
and streaming live on Peacock. Strategy at the market's crucial moments.
you getting ready to pull up above it. Oh, man.
Free coverage. Sponsored by E-Trade from Morgan Stanley. Trade commission free today with no account.
I wish I knew what was wrong with me. I just don't see anything, guys. You know what I mean? It's like, I guess we did pull it back to here because it pulled back, it held it, and then boom. But be right back. I was talking and my mic wasn't on. I apologize.
Not really too much more to add, but just acknowledging a new session high here for the dollar index, up to 106.22. As a reminder, yesterday's best was 106.33. This latest uptick does appear to coincide with euro dollar just losing 106 status. Now down to 105.96. Yesterday's trough was at 105.71, with it very much has been a case of one-way traffic for the euro ever since those disappointing PMI releases earlier in the session. If we do see further upside for the dollars, keep an eye on dollar yen up to 149.87. Do bear in mind we did cross the 150 threshold briefly yesterday to 150.06, and we did see Kishida early in the session try and jawbone dollar yen. So look out for any potential further rhetoric from Japanese officials. Just a note for ASOS, they note they will now announce its full year 23 results on Wednesday, the 1st of November, which will be 1 week later than previously announced. They see a full year adjusted group revenues of £3.538 billion, and the performance for the period to the 3rd of September is in line with that reported and the post-close trading update on 26th of September. And just note, ASOS shares have seen a little bit of a dip lower in recent trade following that update, now down some 2.8% on the session. And just on the ags front, Brazil soy exports, they're seen reaching 6.142 million tonnes in October. That's an increase in the year-over-year previous of 3.589 million tonnes.
Bite to eat. Again, we got huge data and earnings coming up. I'm not going to kill myself to just try and get into a trade. But I will try if it's there. I will take the opportunity. If you guys see anything with relative strength or relative weakness, shout it out in the chat. You know, we're here to help each other make some money. You know, it feels like it's going to be a slow day. News can break any minute. Let me see. So I have ARM, AMD.
Just in terms of a bit of a broader market update, as the dollar does continue to pick up, we are seeing some downside here in the crude space, with WTI showing losses in excess of $1 at the moment. In terms of recent headlines, haven't seen too much. Has seen the UN call for a ceasefire. Obviously, it's unclear whether either side will follow suit with that request, and it's very much as I'm sure you would expect them to do. It's not necessarily pinning on geopolitical events, but it could potentially be a case of the dollar upside just dragging the crude complex lower. Just going back to ags then, Brazil corn exports, they're seen reaching 8.239 million tonnes in October. That's going to see 6.173 million tonnes in October 2022, according to the ANEC.
I'm going to scan around and see if I can't find something.
Telecom Italia saga, Vivendi has told Telecom Italia's directors it would fight a grid sale in court if no extraordinary shareholder vote was called. That's according to sources cited by Reuters. This follows reporting on Friday that Telecom Italia's TIM top investor Vivendi wants any decision on the TIM grid sale to be subject to an extraordinary shareholder meeting, as reported by Reuters sources at the time.
I think we got to see 85.50 or 88.50 area. Because you broke into the zone. Let's see. I mean, it all depends on what Bitcoin does anyway. But I was thinking, this break into this area here on Coinbase. What would be ideal would be to catch this pullback to this double top, this support and resistance zone right here at like 85.50. Yeah, 85.50 to get some follow through to the upside, but looks like it's already headed there. Where's that? 91.04. 91.04. I'm not sure why I have that there. 91.04.
As well, just noting from a geopolitical footing, Finnish police note that the Russian vessel is no longer part of their main investigation line, and that is with regards to the recent Baltic Connector outage. So again, Finnish police just noting the Russian vessel is no longer part of its main investigation line.
I'm cautious on Tesla. Like I say, I think I wouldn't be surprised if you get a hold here, right? I wouldn't be surprised if it holds. And I just don't see us getting any like extensions or anything. Yes, the SPY is extending higher, but 425 was the target. I don't know how much it's going to give you, right? It may not give you much more. And then you got to worry about the pullback because of the earnings that are getting ready to come out. And the SPY ends up having a, break-even day. But if we do, break above 425, okay. We break above it. Volume's not really low, but it's not like it's not a ton of volume. I'm just okay with being patient. I'm just gonna put it to us like that. Yesterday, I lost a little bit because it felt like there was such a movement, and you feel like the market has moved, and you see yourself doing something stupid and trading, and that's what I did yesterday on AMD. So you won't find me doing that today at all. All right, so here's the break and hold of that prior high. Tesla just pulling back. All right, so the one thing I can say is the volume is decreasing as Tesla's pulling back. And it's all, god damn. Wow. Unbelievable. So that's testing the 200-day moving average. That's a break above the 200-day moving average. Let's see if we can get another long off of the 200-day moving average. I was hoping to get long at like 210, but it ain't gonna give it to us. Right? It's like 212. It's like 212.50. No, I'm sorry. 215. Well, that would have worked. That's crazy that that would have worked. I just didn't want to step in front of Tesla like that. You know what I mean? You just didn't want to step in front of because of how short they are here. And yeah. All right, so I wonder if this is going to be our resistance level now. We're back at that resistance level on the SPY. See if we can't get a nice move to the downside here. That's what I'm going to look for. And I'm going to keep that on my radar. The Qs. I have a migraine like crazy. Holy cow. Oh, I don't have the Qs up. Shit. Come on. I'm going to have to, I was thinking a little bit ago, I'm deleting all my charts. Not like fully deleting them, but deleting all the like lines and stuff. And I'm starting over. I feel like this morning I was going through stuff and I'm like, I have way too many lines on these charts. Like, it's distracting. Give me the 5 minute, I guess. Support. Dude, Tesla's just breaking down, guys. That's a shame. I didn't know. I didn't know it was going to do that. I figured it would at least had given you until. Let me go back. Let me go back a little bit. Go back. Go back. Go back. Go back to where you were, or wherever you came from. Let's see here. So 228, 229 is a really nice resistance level. And we could not. Look, they're not even going to tell you why. It's probably because the dollar was pulling back, and this is timing for rates to slow down. And 220.57. Okay, so there's a gap. You just seen it in currencies, right? We talked about it Sunday night that you could start to see the dollar pull back and the euro start to go higher. That would help cause Bitcoin to go higher.
Report after round 2 of Politico order. Emmer has 90 votes, Johnson 37, Donald 33.
217. So what does that mean? Alright, I'm watching 217 area. I'm gonna watch this 217 area and see if it breaks it. Man, what downside, right? Man, I just couldn't go short. I couldn't do it. The volume was light. You know. It is what it is, man. It happens. It happens, I guess. Hope you guys are having a good day. Do you guys see anything? If there's even anybody there. Do you guys see anything in the markets that's moving? Like worth playing? I mean, I'm not going to be surprised if it's a slow day today with what we have coming up tomorrow, Thursday, and Friday. Yeah, like 214 looks good also for Tesla. There's a couple areas, guys. 216ish. See, why does it do this? Um,
shower had gone from being a joy to being a burden. I was afraid I would fall. I called in just one day.
so you have support here at 216 from what I see. I'm not gonna fool with Tesla anymore because it's like it's a nice break. It bounces, breaks through. I just don't like how it broke that level. So what I'm looking at here is this. I'll show you guys. And I kind of don't like it because it set up a really bullish pattern and it didn't complete it. So what you have here is and you have the 200-day moving average right there also. At least from the way I see it. Oh shit. You know what, guys? Look at this. I forgot to take logarithmic off. That makes such a difference. Wow. I'm telling you, for me, it makes such a difference, guys. Wow. So here it has... Okay, right here. Yeah. So you have, like, this pullback. And, of course, it's not going to be able to show you... I'm not going to be able to show you guys. So here at, like, 215.75 and 216, you can see how it was resistance. You break above it and hold it as support. You get this nice bounce off of it. And then it just fails. That's a failed breakout in my eye. So... We could scalp the SPY here too. It's already going. They've already taken the trade, guys. Trade's already taken. You had to be on it. Trade's gone, guys. Fuck! Damn it.
Some bill announcements from the US Treasury. US is to sell $56 billion in 17-week bills on October 25th. So $85 billion in 8-week bills on October 26th, and $95 billion in 4-week bills also on October 26th. All just set to October 31st. To note those sizes are unchanged. For Meta, META, dozens of US states sue Meta platforms and Instagram for harming mental health of young people, according to a court filing.
Look at this level on the Qs, guys, at 358. It's pretty key. Um,
If you look at, you haven't missed much in equities if you actually didn't invest in big tech, and I think that's one of the things.
oh, nice, man.
The rally here has been
Yeah.
now. It's like
I feel like it could be a one of those days where it is stressful, no matter what you trade. Like Tesla, I was thinking about that short. I just didn't think I could step in front of it. I thought about the long. Didn't think I could step in front of it either, and it was the right choice because it's pulling back. So 358. All right, is that what I was looking at? 358 area, 359. Let me see. Yes. And look, there's the bounce, guys. On the Qs, this level here at 358.75. 358.75. Not sure how much room you have to go higher on the Qs, which I'll pull up a daily, but this level right here, 358, like 75-ish. It's like right here. It's like right there. Yeah, 358.70. You could see that wick, and then it just pops. I'll show you guys what I'm talking about. Oh my goodness. Well, what it is it's this, right? This support zone right here, 358. I'm pretty sure. That's weird. Hold on. That's so weird. Oh, because this might... So, 358.68. So, it is 359. I'm sorry. It's like 359. Just never mind anything I said, because TradingView looks completely different. Like, this has here 358.71. 358... What? 358.30. So like this here, that here is... I just want to see something because something's going on here. Like, all right, so it's right on it. So 358.02. 58.05. And then this here. And it's on the same time frame, 358.69. So that's where the mix-up is. Alright, whatever. I don't know. Just we're getting pissed. I'm just getting frustrated. Getting really frustrated. So I feel like we're seeing a lot of positioning while it's on. You can feel like if you're wanting to be long, you need to start piecing into it. Even just like for a month or two. I'm not talking long term or anything. I'm talking like going into like November and December for that Santa Claus rally or like a rally to the end of the month even. But let's see. I mean, we have Microsoft and, you know, a lot of the big boys getting ready to report tonight into tomorrow. And I feel like that could, you know, send this market in either direction, to the upside or downside. Because I watched... I don't know if anyone else noticed, but The Spy did not react to Netflix earnings. And they absolutely killed earnings. And The Spy did not give one shit. It really didn't. Spy did not care. Which was funny to see. right. USD. Come on, you gotta bounce, bro. Bounce. There it goes. Let's go. Let's bounce. Let's bounce off of this level. So far it looks to me that like you're getting ready to get a pullback in the 30 year in the 10 year probably, well at least a 30 year, but you're getting ready to get another pullback in the dollar. Is what it seems like to me. After looking at all this, I could see us starting to pull it back. Give me that bounce, baby. Give me that bounce back.
Yeah, I think he was waiting for the earnings to come out because as you saw from GM today, earnings was pretty good. It was down slightly from last year, but demand is still pretty healthy. And I think he's looking for that one last, if you will, cudgel to be able to use.
So we have a low of 422 on the SPY. We have a low of 422.43 and a high of 424.82. I'll repeat. A low of 422.43. Call it 422.50. And a high of 424.99. 424.82. I'm sorry. So we haven't moved, guys. We haven't moved, and it's okay. We could see that coming from a mile away because of what we have coming up. Let me see here. I know. I'm with you, man. I'm with you. I wouldn't. I still wouldn't. Even if you felt like it, I don't think it'd be a good decision. Because we're not moving. I don't think it's a wise decision. I don't think there's a reason to put capital at risk on a day when it doesn't seem like we're going to have any momentum because of what we have coming up. We're one day away from like this market getting a lot of information that it's looking for. So I'm with you. I haven't even made a trade, fortunately. I'm still trying to find there's got to be something with relative strength and relative weakness. Good thing I didn't put that on. Gold's pulling back. Let me see here. Oil's falling. Oil's pulling back here. Wow. I wonder if this is something to think about. I'm really thinking if we get some downside in oil like this, see the volume's not really there, even though doesn't mean that it can't come in. So that's a nice test on a 1 minute chart on the SPY, but I don't think you get through 425. I don't think you break through that level yet.
Meantime, the CEO of payments company Fiserv coming up after the break. Stock's getting a nice boost after raising guidance for the second quarter in a row.
Plus, we're watching Spotify reporting a surprise profit, beating expectations for new subscribers and total listeners. CFO Paul Vogel joins us this hour. First on CNBC with a big turnaround
See, like I said, it's a nice test there on that. I don't know if it's my AirPods or what, but they're still connected. Let me see here. Like, okay, there's sound. There is sound. All right. All right, so there's the S&P's just pulled itself back. Wouldn't it be nice to try and get a nice pullback down to like yesterday's close? That'd be pretty sweet, right? That'd be a nice move. Let's see here. Let's see here. We're going to sit here and trade off the hourly chart. That would be a nightmare. Let's see. Why not? Let's try something here. Let's see what happens. It's already went up. But it's not weak. Do you guys see this? See how it's not that weak? It could be. It's just not. There's just not really any relative weakness with the S&Ps right now. Oh, come on. Here we go. 423 test. Let's test this level. Let's break VWAP. Let's break it. Feels like it's either my headphones or something. Come on. Fuck. Well, that ain't that put isn't going through, guys. But I was just trying to grab puts right now. If you're going to get them, I would be getting them right now. Fuck. So now we're back inside the intraday highs.
Fixed project across market, just seeing the continued downside in the oil complex. WTI and Brent around about session lows. Brent just dipping beneath the $88 a barrel mark. Also seeing a bit of weakness in equities in recent trade, particularly in the Russell. Nonetheless, equity futures are still firmer on the session. Meanwhile, dollar currently around about session highs, 106.25 last for the Dixie.
See if we get a bounce here. Tesla's in a nice spot. I still think you got just a like. It's not that like we have weakness, but it's like we have so much coming up for tomorrow that maybe let's see if we can get a lower high here. There's a break, pullback test. Try and get that 9 EMA rejection. You know, maybe we try to get... I'm going to try and get like 30-40 cent trade here. I'm not in anything right now. I want to get a bounce. It's not going to give it to me. She's going to break VWAP. It's already gave us the bounce back right there. We already got our bounce back right there. Broke. Tested VWAP. Bounced back. Came off of this level. Pulled back. You're weak. Can't bring it down. Volume's also weak though too. Don't be one-sided because the volume's gotten really weak as well. The only thing we got going for us for the short side is we're back inside this range. You broke out of it. You tried to hold it. Failed extension higher. Now you just you fell right back inside of it.
Really strong growth, double digits, 26% revenue growth, payment volumes up 15%.
This is what I was hoping for. Maybe we get like a breakout to like
Well, I mean, there's Square, there's us, so we're really the
424 maybe.
platforms out there. But the
I was
market is
hoping for that.
large. So we have been a share
Wasn't sure if they were going to do it or not, but they did.
value-added services. So
And look, they just took it right back in. Hold on. I think we can get I think we can get ourselves a lower high here.
would be an example of that.
What about the consumer overall? There was some concern that we'd see an impact from the student loan payment resumptions. Are you seeing that at all?
What we see right now is kind of flat to what we saw last quarter. So you can consider it on a year-over-year basis as a slowing. Although the fourth quarter is a very
So funny what he said
I think so, although, we're a global business. We have
on CNBC.
business in Latin America, Brazil, Argentina, where we do have what I would call excess inflation.
I'm not sure, buddy. The only thing I have on is CNBC.
Election. So we'll see how that runoff.
I'm not sure, bud.
But I still think, the U.S.
I have Trader TV on here. Yeah, Hindu.
Short SPX options from the failure of 4260 test.
Latin America, in particular, is super strong. Is that sustainable for you?
All right, here we go.
We've built that business. We built the business.
I think he's Canadian, but Hindu, I guess. Scott's eliminated from the House Speaker race. That's hilarious. Jesus Lord. All right, there was our there was our scout.
We have done a bunch of tuck-ins. And
Shit.
the way our point of view is,
It's all good. It's all good. I'm not worried about it.
we believe without scaling distribution, we can startups and
Yes, because that could cause issues. That's oh man, guys, that's so true. So you remember what I showed you guys with the Fed's asset program? If the Fed's closed, and I brought this question up, was what happens if they don't come to it, if they don't get a new debt agreement or a debt deal to raise the debt ceiling, then the bank what happens when the banks need liquidity? They don't get it? Come on, give me a damn bounce here. Shit! How did I not get short up here? Sounded like a Mexican rapper or something. How did I not get short up here? Let's see here. Oh, yes, it is. Because it's this right here. It's a Squawk Box, man. Yeah, I don't know if he's Hinduish, but he's from like Europe or something. Quick. This news feed here is really quick on news. Is why I have it up. That's what it is. He's from like I think he's probably over at the he's probably in Euros, like he's probably in Europe or something.
So just seeing a bit of an extension of the moves
Yeah, right
mentioned
here.
earlier, a bit more further pressure in the equity space in recent trades, a bit further upside in the dollar as well. Oil prices again around about session lows.
It's like a global Squawk Box. Really quick on the news, like before Benzinga and stuff. That's why I use it. I noticed that it's actually, and they cover
So
a
note
lot
for
of
Orange and
things.
France. Orange and Massmobile have picked up Romania's Digi to acquire assets. They plan to divest to address EU antitrust concerns. According to sources via Reuters, does note the pick of Digi has backing from EU antitrust regulators.
So I was looking at the 423s for today, and they are already in the money.
Or in orange, dropping here report speculating that Orange and Mass Mobile have picked up Canadian Digi to acquire assets. They plan to divest to address
I can turn it down. I can't turn it off. You know what I can do though, because I need it. I'm not turning it off. Not with two wars going
We're seeing a
on.
bit of downside in our AFP shares. You know, as well, assets to be divested do include spectrum, access to infrastructure,
let me
customers unit, and brand. According to the sources, a bit of downside seen here in Orange shares.
Yeah, it is pretty loud. My fault, man. I appreciate that.
If you haven't already experienced what Jacuzzi bath remodel can do for you, your family, and your home, don't wait any
Next time I'll have to just play it for myself and hear, because I'm sure there's somebody else out there too that, you never know, somebody that's at work or something and wants a Squawk Box and whatnot, and kind of like get news as soon as it comes out. So I guess we're coming back in to test this 200-day moving average. Sounds like we have a reason to break it now. Yeah, I turned it down. It was pretty loud. Sorry about that.
EPOW, Sunrise New Energy, announcing discussing collaboration with LG Energy and Abu Dhabi investment fund for lithium battery material manufacturing overseas. That's Echo Papa, EPOW.
That was a nice scalp up here. I never took it. Didn't take it. I didn't really get the chance to. I had the orders up. I had the order up and ready to go. I can't remember. I don't know what I was doing. I can't remember what I was doing. I was either fooling with the sound or just wasn't ready. I didn't expect that news to come out right then and there. And it's funny how it did that, right? We bounced right back to the 20-day moving average, or 20 EMA, or 20-day moving average, and we get that lower high in, and then the news comes out that the speaker, and I don't know why CNBC hasn't covered it yet, because they've been talking about it. Well, it releases 2 hostages. Alright, let's see here. See if we just take it right back to VWAP. And that'll tell us that the SPY isn't doing too much today. There is a little bit of a pattern here, if you guys notice. You do kind of have a failed breakout attempt on like a pennant, and a failed breakout attempt. Do you guys see it? And this would be your retest for further downside. Right? Right here. It's so ugly though. Nah, never mind. Never mind. Take that back. Take it back. What I was gonna say is I thought this was like, we could have had like a small pennant there, and that's a failed breakout. It came back to test it here, and that's a failed breakout. And this would be, in a sense, a breakdown. You would need some volume here with it, which we don't have just yet. I would like to see a pullback right here. This would be a nice scalp. I might take it. I'll let you guys know when I get my entry.
So we'll keep an eye on some US regional banks as well. Not downside being seen. PacWest now down by about 12% or so. The carry lower by about 1%.
Let's see if we can get a bounce up towards VWAP right there. Oh, okay. Yeah, I mean, like I say, I can turn it down. But I know a lot of people, if it's too loud, I get it. I'll have to, I'll turn it down. But I do know there's a lot of people that do want to have some sort of, you know, some sort of source of news that they can go to if they're at work and don't have one for themselves, and it gives them. That's the whole point. Alright, something's going on with Big. Let's watch Coin. There's just news that came out with Coin. I'm surprised CNBC hasn't. Look, Coin's dropping, guys. There's a tweet or something going. And this is what this is. Shit, man, we were late on that. Damn it. That's why I hate Benzinga. They're not good. And this one didn't cover it. This is more of a global thing here. U.S. States Meta, U.S. lease order. Brazilian soy exports. Shit. I guess this means that so I don't know what they just said. I don't know what he just said. I know it had something to do with whatever the tweet was that they were talking about yesterday is now gone. I guess talking about it becoming legal or something like that. I don't know. Like whatever this whole Bitcoin talk has been. That's hilarious. That's hilarious. Let me see here. So how's your day been going though, Basic? Okay. I know you said you traded whatchamacallit, and it, you know, stressful trade. Sometimes it's like that. Sometimes it's like that. Alright, is this going to give us some further downside here? Or is it going to break the 9 EMA? Coinbase just is not getting a bounce here. Let's see here.
Bills from the US, sells $75 billion in 42-day CMBs. High rate 5.3%. Split to cover ratio 3.91 times.
Let's go to see if it's in here. If this tweet's gone. This place buy and sell, dropping soon. Wiz, what should I do next? Oh my gosh, what is this? It's I don't care, but shit. I don't know who the tweet was from, or
RKN, Crown Electrokinetics getting a pop to the high of 19%. Charlie Romeo Kilo,
Is it
November.
possible to fall in love with your home before you even step inside?
Discover the Magnolia Home James Hardy collection, available now in siding colors, styles, and textures, curated by Baron and Gaines.
What does that even mean when you bet against innovation? Like, what innovation? I have not seen any innovation yet, and it's been around since 2008, 5, 2005.
2,000 years, our family has celebrated life and prayed for our world. We cared for the poor, started hospitals, blessed marriages, and educated generations of children. Guided by the Holy Spirit, we compiled the Bible.
Let's see here.
Catholic Church.
Yeah. Yeah, I am too, man. I am too. I couldn't make my mind up on Tesla, and I missed it. I missed it this morning, just like I missed it yesterday, because you had to take it pretty quick. And,
Crypto space, just so you are aware. You know, a Barron's journalist on Twitter just suggesting that for today's update, the iShares Bitcoin Trust IBTC has gone from the DTCC's list.
so now he's talking about it. Usually they're quick. Like, they're the first ones to report it.
At the UN, U.S. Secretary Blinken speaking now says he must affirm the right of any nation to defend itself.
Huh? Meta?
As the senior crypto writer for Barron's Online, just tweeting that for today's update, the iShares Bitcoin Trust IBTC has now apparently gone from the DTCC's list.
US sells 75 billion in 42-day CNBCs, 5.3%. Yeah, and Basic, thank you for that, bro. I appreciate letting me know how loud it was and stuff. Okay, here it is. So now they just put it up. So Barron's Joe Light tweets, with today's update, now the iShares Bitcoin Trust BBT is gone from DTC's list. Okay.
Hey Carl, here's your CNBC News update. There are now 4 candidates remaining in the House Speaker race. House Republicans are voting behind closed doors this morning to put forward a replacement for Kevin McCarthy, who was ousted 3 weeks ago. Representatives Byron Donald, Tom Emmer, Mike Johnson, and Ted Kennedy.
Feels like we're going to get down to this 422 level.
The Chinese military official who disappeared from the public eye 2 months ago has been officially removed as defense minister. That's according to state media reports. No explanation was given for Li Shangfu's dismissal, and China has not announced a replacement. Beijing also abruptly removed its foreign minister in July. And the 8th installment of the Mission Impossible franchise won't hit theaters as planned next summer.
That's so ridiculous. And people think that United States, world reserve currency is at risk. This is the exact reason why it will never be at risk. China continues to have these random people just go missing. They don't let you audit any other stuff. Like, they're just shady. So until you can put trust in Xi Jinping and, you know, whatever other shady country you got, I could see it being done by Australia or Europe or something. But even then, it's like, you know, there are partners in crime. Like, you know. But for this whole, like, China being the world reserve currency, like, it cracks me up. It cracks me up. Just because of the first off, not only the education behind it that I don't have, but you know, there's, you know, where's the trust, right? You really gonna trust them with your money? You really gonna trust them? But I forget what Fed member it was. The guy that is leaving or left and went to Purdue. he gave you a really good explanation of why China would never be the world's reserve currency, at least not for some time. So
Secretary Blinken said humanitarian forces must be considered.
the petrodollar's at risk by the BRICS nation. Yeah. I think this is also why with like these two wars we're gonna start seeing, I think we could start seeing currencies and yields start to turn around, you know, in case, you know, you don't want to, I guess you don't really want to send yourself into a recession and still have a war to fight. I guess you could. They did it in '08, right? We've been in the Middle East since 2000 to 2016, right? You've been over there for 20, 30 years, 40 years. We've had a few small recessions in between then, so I guess you can fight a war with the mild recession. But I think that there would,
So on geopolitics,
there
on
could be a change.
Hezbollah, they're stating they
Or
strike
we
Israeli
just keep
posts with guided missiles. That says Hezbollah says it strikes Israeli posts with
running
guided
the numbers
missiles.
up, right? Like a car that used to cost, you know, $2,000-$3,000 new, now costs 30. Who's to say it doesn't cost 300,000 in 40, 50, 60 years, right? We got that new Toyota Corolla for $350,000. You are the proud owner of a new Corolla for $250,000. We'll just keep going up, right? Because numbers can keep going up. Well, I guess our our foreign exchange can too. The pips will just be getting bigger. Think about those percentage gains at those levels, right? 3% on 2% on a, you know, on a SPY that would probably be at, let's see, we're at not futures, but SPY we're at 422. See if we're at like 2,000 or something, right? 2-3% on 2,000. That's a nice move. But yeah. What country would that be? Would that be Brazil? Because I think Brazil just started doing. I think Brazil started cutting rates. I thought I seen that not too long ago.
To use influence and leverage to secure unconditional and immediate release of hostages.
There's a nice test of the 423. Man, I should have grabbed those puts up there. It's whatever. It's no big deal. Shit. And it's not even trying to bounce back to VWAP. It just went this whole level. Notice that? How he just went, we rejected off of there and went right into this 423 level. Let's see here. Who is the
Commentary from the
dollar?
CEO just says we do think we've reached an inflection point. We will report profits going forward. Come to there from Spotify, who's speaking on CNBC. They are currently up around about 11% or so after earnings.
Yeah, what are petrodollar? Are crude oil export revenues denominated in U.S. dollars? The term gained currency in the mid-1970s when soaring oil prices generated large trade current account surplus. As far as then as of now, oil sales result in current account surplus we denominated in dollars because the U.S. dollar was and remains by far the most widely used currency. The U.S. global's popularity does not depend on the goodwill of oil exports. It is based on U.S. status as the world's largest economy and goods importer with deep liquid capital markets backed by rule of law as well as military power. And that's it. That sums it up right there too. Not only just the liquidity, rule of law, and military power. Something that China doesn't have. They have rule of law for the citizens, but not when it comes to what they want to do. Spotify thinks they have reached an an inflection point where it will report profits. Well, I'd hope that it would report profits going forward. Was it just going to stop? I think the person just left it out, but I guess positive. Where it will report profits going... Oh, report profits going forward. Okay.
So, Secretary of State Blinken speaking says the US does not seek conflict with Iran. Says if Iran or its proxies attack us, make no mistake, we'll defend our people and defend security swiftly and decisively. But just noting the US does not seek conflict with Iran.
I didn't think about it. You know, I didn't really get it there after, you know, as you said it. You don't really hear that term that much. Thanks for bringing that up, man. See, guys, you learn something new every day. You learn something new every day. I feel like I've heard it. I've heard it before, and it just, for some reason, it didn't click. Let's see if we still continue to get weakness here. Because that news came out that I think one of the... Now, don't quote me, but I think one of the members that Congress is... or the House is trying to select is... They pretty much said no to. So I don't know if that means there's like 3 out of the 4 left standing for the vote. You know, to go out and take the vote.
Earnings here from Kering AFP. Doesn't report Q3 revenue, 4.464 billion euros.
I don't get it. I don't get it. I really don't. I really don't. I really
so
don't.
That revenue would be down
like,
9%.
Half the shit that's going
does
on.
report
in the
6%
world
negative
right
exchange
now,
rate effects on its
people
Q3
are.
sales. We know the Gucci revenue down 7% to 2.22 billion euros.
I have no answer. So I guess it shouldn't surprise me. U.S. Secretary of State Blinken. U.S. Secretary of State Blinken.
So you're also seeing earnings from Michelin. Have a look at the 9 months revenue, 21.15 billion. As compared to the estimate, 21.19 billion. So a bit of a miss there. You know, the Michelin automotive revenue, 10.61 billion, missing the 12.24 billion estimates. Just going back to Kering.
Let's see here. That's a low volume bounce.
You know, that Gucci revenue on a comparable basis is down 7%.
As
So compared to this, we're down 6.22%, so worse than expected there. And that comp revenue down 9%, showing for down about 6%. So once again, worse revenue than expected there for the comp revenue overall. You know, Yves Saint Laurent revenue down 12%, deeper than the expected -11%.
So I'm gonna go have a smoke, I guess, and I'll be right back in like 5 minutes. What I will do is we'll throw on some CNBC. I'm going to be patient. I'm going to wait and see what the market. We probably won't do anything, but again, we could get news out of nowhere. We could get some news. Tesla's sitting here at the 200-day moving average, so I'm going to take this into tomorrow where if these earnings come out half decent, then I'm going to watch for Tesla to get a bounce off this 200-day moving average. And see if it can, you know, get itself back up to like, let me give you the levels. But that's something I'm watching this week. Oh, what's TLT doing too? I can tell I'm not making any money on these calls. I'm going to have trouble getting out of the rest of these TLT calls that I have. 85. Man. I think I have, what, until January, December? I think I only have until December on these. December 29th. And I only have a few left. I did, because I was able to take profit on those, and it wasn't much. But I think now would be a really good time to think about, like, if you get like a pullback in TLT, I would look to get like a year out, get it for like a year and a half, maybe a year, and see if we could get a pullback if we got TLT back down into here at like $84, $85, I would seriously think about 90 calls, 95 calls, even 100.
We're seeing robust trends around the world, outside the US, and actually also the US business in its total revenue growth. We've spent the last few years leaning into the opportunity to grow, reinvesting ahead of the curve on marketing, on innovation, on revenue growth management, packaging, and on execution. And so I believe we have the momentum behind in our business that gives us a good confidence for the rest of the year. As you say, that's in our upgraded.
Yeah, so I'm gonna go.
And we feel good about the
I'll be right back.
of our business going into 24.
It's too loud. I
notwithstanding some of
apologize.
the consumer clouds on the rise, and we think the momentum is there in the business.
That was Coca-Cola CEO James Quincy speaking last hour to us, touting the beverage company's bullish guidance. They raised guidance after beating street expectations for the third quarter. Stock is moving up almost 3% on the back of those results. One of the higher gainers of the Dow this morning. Quincy also addressed some of the concerns out there in the market about the obesity drugs like Ozempic. Quincy says that they don't pose a real fundamental change to the beverage industry, Carl. He said a lot of hypothesizing, very little data, even some of the worst estimates as far as how many people could be on this drug. He just doesn't see necessarily cutting into beverage sales. Says you can cut calories with food. You need the hydration with liquid, and that Coke's been positioning themselves toward a more wellness portfolio, zero-calorie Coke, zero Sprite, in that direction anyway.
Can we get other CPG companies getting volume inflecting positive?
Well, that was the thing that really surprised people. 2% volume growth, 9% pricing growth, and that's why it's a standout compared to household products makers where it's been zero or negative, food companies zero or negative. I asked him about that. He said they were very conscious of the pricing moves that they were able to maintain and offer value for consumers.
Yeah, maybe we'll see if this is a turn for the space or not.
They say Coke says it's sustainable for them at least.
Yeah. Dow up 220. Let's get post to post with Bob Pisani. Hey, Bob.
Good morning, Carl. Good morning, guys. Look, I'm encouraged by the fact the S&P is up 27 points.
Yeah,
the
there's
yields are a little bit higher.
Bob
That's
Pisani.
good
There's
news.
no reason
But
to
we're now
worry.
getting earnings, and I'm a little concerned with what I'm seeing here. Remember, in between the
reason to be
banks and the
concerned.
tech company are the big industrial names, and they've been reporting recently.
Does anybody here think that we're actually going to? Do you think that the market is going to give us,
That's fabulous. Well,
even if
they
things
did
get a
report
little
beat, but
bad?
their fourth
Do you
quarter
think the
guidance
market's
was
going to
well
give us
below
like a
expectations.
350
So why are we
again?
moving up here? Remember
Do you
something,
think we
this has
see
been a terrible
October
performance
lows?
all year. This is an 11-year low right now. $90. This was $90
That would be
in
my question.
2012. And it's trading at like a 9 times, 10 times forward multiple.
Because
Those
part
are
of me
terrible
doesn't
numbers, even
think
for industrials. So this
that
stock is
one,
extremely washed out at this point. So slightly
like even if
lower
it got
estimates
really
for the fourth
bad,
quarter
I
aren't
just don't know if the
necessarily gonna
market's
drop
going to
it
give
more
us
because
that
it's
again.
already been
I
dropping
really
rather
don't.
dramatically, but don't kid yourself.
I feel like
Guidance
there's
has been
this
very
like
good.
certain
Same
extent
thing
to
with,
where it's just like,
Illinois
okay,
Toolworks,
sellers
which is
just
right over here.
they're
So
not going to
take a
sell
look
it
here.
at that
This
price.
is very big in the automotive space. Sorry, guys, I get out of your way to
Where are they
here.
going to pick
But
it up
the
again?
important thing
Right,
is,
that's the thing. That's
they
the
reported
uncertainty
a
about
beat,
owning
but they
something is
talked
if you
about the
sell it,
impact from the strike,
you
for
don't know
example,
how
on
much
their business.
if you're going to
They're
have that
talking about
price
a
again.
12-cent reduction for
And
the
I
fourth
feel like
quarter. And 219
me
here,
personally,
that's flat
let's
for the
like
year.
I
It
hope
hasn't
I'm
gone
wrong.
anywhere. Illinois Toolworks
I mean,
is
I don't
one
want
of
to,
the
it's
big
selfish
global
because
industrials,
there's
essentially gone,
probably older people
nowhere,
that would not like
for
to
the
see the
entire
S&P
year.
go
Then we take a look
to
at
the
Dow
lower
in the material
300s,
space.
but
Their
if I
guidance,
start getting
for
if
the
we start getting
revenues were
to
below
like that low
expectations,
380 again,
10 billion to 10.5 billion.
I will be
That's a
starting to
little bit below
buy
the
again. I
expectations
will be
overall. Then we have
dipping my hands in the
Corning
cookie
here.
jar.
That's another good example.
But I
here.
just
Another
if we
big
get
company.
350,
So
I'm
sort of
just
in the consumer space, but also
I
slightly in
am
the
I'm
industrial
fully
space, I
going to
guess you
take
could say
advantage
here.
of that.
They missed on the top and the bottom line, and the guidance was well below estimates. They mentioned weak demand right across the board. So,
All right, I will be
Carl,
right back.
The industrials
I was
are now
I was
reporting.
pulling
We'll
something
see
up,
what the
but
tech
my
companies say. But right now, it
short-sighted
looks pretty
mind
obvious
forgot
to me
about
that
it.
the industrial sector is going to see a reduction in earnings estimates for the fourth
I'm gonna
quarter.
grab something
Now
to
we'll have
drink
see
real
what the
quick,
big
and I'll
tech
be right
companies say.
back.
Carl, back to you.
I could
Great
put up
point, Bob. And speaking of which,
Coinbase or
Alphabet and
Tesla,
Microsoft do report tonight.
something that's
How to play
actually
those
moving.
names ahead of earnings is next when we're back at 2.
Our speaker rate now down to
All right, there's speaker news. Feber and John.
107 votes and Johnson 56.
Somebody. So they're down to 2 people right now. Is it John Fetterman? I don't know what he said, but U.S. House Speaker race is now down to Emmer and Johnson. I thought so, according to
A note from H.C. Wainwright.
Representative
that the
Pence.
$3 price target buy
I'll be right back.
Athletics.com.
Mega cap tech earnings on deck tonight. Alphabet and Microsoft after the bell. Deirdre Bosa has what to look for in the prints on today's tech check. Hey, Dee.
Hey, Carl, good morning. So let me start with this chart. It's Microsoft versus Google this year because I think it says a lot about where these two companies are at as we head into earnings. Microsoft was the early generative AI winner, in large part thanks to its deal with OpenAI. In January and February, the first part of that chart, it outperformed as Satya Nadella said things like he wanted to make Google dance. Google, however, answered that call, came out with its own suite of generative AI products, and for a while, as you can see in the middle part, their stocks were neck and neck performance-wise. Then second half of the year hit, and the air came out a little from the AI bubble. Treasury yields rose, and core, currently cash flow generating businesses, they have now taken the focus. For Microsoft, that is PCs, enterprise software, and cloud. For Google, it's still advertising, and that's where we are right now heading into their latest reports. At Microsoft, AI has the potential to bring in billions of
give me
dollars
2
from
minutes.
enterprises.
Give me
as
2
CFO
minutes. I'll
Amy
be right
Hood said
back.
on
I'm
the
grabbing
last
a
earnings
Red
call,
Bull.
That's not really going to happen until early 2025. Cloud, meanwhile,
and
has
I'll be
seen growth
right back.
decelerate, and some
It's 12
concerns
o'clock.
are building around IT budgets in the year ahead. So
We're
that's
sitting
gonna
at this
impact the
200-day
stock
moving average. We
now
put
while
in
AI
a double
is gonna grow
bottom.
in the future. Now, Alphabet
at the
on the other
200
hand,
day
is
because I want to see what
Bernstein
we start to
called
do
earlier
this
week
afternoon.
The warm
One,
hug of megacap earnings. Its
two,
advertising business still makes up
and if
nearly
we
80% of overall revenue, and
can't
it's
get
been
up
more
and off
resilient
of
than
it,
those
then
at Meta and Snap. So
I think
sure,
that
search
still
could be
all
disrupted
depends
by
on
generative
tomorrow's
AI sometime
or
in the
tonight's
future,
earnings.
But Google has convinced the street
So
that
I'm going to
it's
go through
on
when
it.
I get
So in
back.
that
I'm going to go
sense, you could
through
call Google
some of the
really
earnings
the
that we have,
personification of
so we
growth
can
at
see the
reasonable
expectations,
price. 10%
and then
top-line growth expected, supported by
go through the
advertising with
charts
options in artificial
also.
intelligence,
And
autonomous
I'm going to
driving
watch
through
Coinbase
Waymo
and
other
Tesla and
moonshots. As always,
a
so
few
guys,
others.
these are
So
called
give me
megacats for a
2
reason.
minutes,
Their
and I'll be
impact
right
on the
back,
broader
and
markets is
we have a couple
potentially
things
huge, and
that we'll do
it
real
comes
quick.
at a time when the appeal of holding treasuries is only rising, so that raises the bar a little bit for equities as a whole. But of course, these names making up the biggest portion of that.
Dee, sometimes the wild cards out of at least the Alphabet print involve expenses. I wonder how
Yes.
closely you'll be looking for signs or clues about that, along with any kind of antitrust or DOJ concerns.
Yeah, so on the cost portion, I would say it's a wild card for both of them, right? They've been spending because to pay for generative AI, the compute power, it's very, very expensive. And that was really outlined last quarter. So if there is a surprise, it would be anything on top of that. We know that CapEx is rising. They have to build out their cloud infrastructure, servers, buy more of those expensive NVIDIA chips to support the generative AI push. And meanwhile, the monetization of that isn't seen for some time. So that is certainly a factor here. And if that is above and beyond what the street's expecting, that could hurt both of those stocks. In terms of antitrust, Carl and Sarah, I don't know what to say. It never moves the stock, even if the threat of it is getting closer and things are actually happening at the DOJ. And of course, there's that big outstanding tax bill for Microsoft. It's possible that the street has been complacent and will finally start to look at it, but hasn't so far. And I don't know that earnings is going to be really the catalyst.
We'll
they
see.
often don't say things about it.
Yeah, options implying a 5% move either way on Alphabet. We'll see what happens after the bell. Dee, thanks. What do you think?
We're watching stocks here. I mean, they're moving in a narrow range, but I would note higher coming off of a fifth day of declines for equities. S&P is up 0.6 because overall, I think what we've gotten from earnings has not been too worrisome, and a few guidance raises. I'm watching some of the consumer staples raising their guidance as well, even in the face of challenging outlooks, for the consumer and for currencies and that sort of thing. Just also point to yields because the March up is what spooked everybody, and it's continuing to hover a little bit higher today, the treasury yields, but we're below that 5, which is clearly something investors want to see.
Yeah, we'll get to ECB, of course, as we chop our way
and
through
Bank of
the
Canada.
Meantime, let's get back to Post 9 and the Judge.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center. The most important earnings reports of this season beginning in just hours now. The investment committee likely to happen, how you should play all of that. Joining me for the hour, Josh Brown, Stephanie Link, Jim Lebenthal. Check the markets. We're green across the board. The 10-year note yield is 4, so we're holding steady after that decline yesterday. Jim, that's really what this story continues to be about. And the earnings that begin today with we'd be having probably a different market picture if rates were still around or above.
You've nailed it. So far, earnings haven't mattered in the 2 weeks since we started, a little less than 2 weeks. What has and interest rates, at least in large part, only factor involved with interest rates, but that has been a big factor, and it's been a big factor for the last 18 months. Investing environment for the last 18 months has been lousy. Company reports, company earnings, as much as interest rates. That will continue, in my opinion, my humble opinion. It's done raising rates. It sounds like, just listening to Jay Powell last week, like that's what he wants to do, Scott. Mission accomplished too early. He doesn't want to take that risk. We've got a couple more years to be a kind of lousy investment. When the Fed signals it's done, that investment environment changes.
Josh, which you own, has been the crown jewel since the last earnings period. It's up 15% over the past 3 months. New record highs that stock has been hitting. So what are your expectations here, and what do you think is really at stake for the state of stocks that's been going on and brings us to today?
Well, thing you asked me, the state of on the S&P 500 is now 17.7. below the 5-year average of 18.7 and pretty much in line with the 10-year average. Not particularly expensive. That being a little bit of an earnings problem. And this is another negative quarter overall of for earnings just for the entire S&P 500. And even companies that managed to beat, GM is an example, do 10 minutes on in a second, it almost doesn't. Cases are being punished a lot more. Beats are being rewarded. That's just not a. Nobody feels good in that kind of an environment. We're talking about though with Google, the market is more intuitive than. Right now is one of those times. Why is Alphabet a 52-week high? Well, very simply, they have the best earnings per share growth this year. Of all of the companies reporting, Apple's going to have negative 1% revenue growth. Microsoft is 8%. And Alphabet is 10 and 37. 37% share growth year over year in this quarter. That's why it's stock. That's what investors are looking for. They want high quality, great balance sheets, big competitive moat, and earnings growth. And if you're delivering that, stock price is getting rewarded. Amazon's the wild card to me. I'm also in that one. We're expecting something like 10 revenue growth, depending who you talk to, but 107% share growth. They have drastically slowed down on spend. Packages delivered to you in 15 seconds anymore. There's a marginal gain from doing that. I think you're going to see a bigger cash flow number here. New guy, he's up against the wall. Those are the two. On which one will have the best reaction. Mm-hmm. Either one of them, I would buy both of them. I have a game plan for the post earnings. I have no edge going as anyone else, but I admit it. That I'm a buyer of, no matter what.
I got you. I bought an event for October 30th. New Macs are expected. So this is a quarter, really, for Apple. New Mac, iPhone. I made a lot of stories about what that stock is in the red today of the mega caps. The chart hasn't looked at 3 months. We'll get some more of that. We'll look at those shares off that news that we had you at the Meta and Amazon are yours, right? So, you know, today you look and you say, got to get out of the gates good before we get to the ones I really care about. But the idea that, you know, yesterday was a moment to change the narrative a little bit. Remember the Ackman tweet? Yields came down, stocks went up, and we're kind of holding in that pattern as we get set for these earnings.
Like this macro environment, right? Because we haven't had that many earnings. Only about 17% of the S&P 500 has reported, but 78% have beat. But really, everyone's just focusing on rates and the geopolitical issues, like Jimmy just said. I do think earnings are going to matter, and this is a huge week, as you mentioned.
Oh, they're going to matter this week.
We have the ones that report this week of the big FANGs. That's 16% of the S&P 500. If you add Apple, that's 22% of the S&P 500. I will say this: within the FANG, Microsoft is 7%
right, we're
of
back.
the S&P 500.
I have two things I want to cover with you guys.
Much smaller. Apple's also
I'll just leave the
7%,
hoodie
but
on.
others are a little bit smaller. Like,
I have
only
two
2%
things.
of the S&P
One,
500, right? So
I want to time myself to see how long it takes sitting
the
here.
ones are going to have more of an impact.
And
think
if
they're
I
gonna
start
have good
to get
quarters. I
groggy,
think you're going to see cloud reacceleration.
I need to get the
I think you are gonna
no
see
sugar ones.
Digital ads
Two,
reaccelerate as well.
I have a water bottle.
And I think AI is going to be the question mark. Can they
I would
actually
be careful.
monetize it? Are we going to be that excited?
I would be careful,
Again, I'm
guys.
not so sure.
And why do I say that?
excited
Because
about AI for Meta,
I think the market now. I don't
it helped
know. There's a
engagement.
couple
In fact,
people
Facebook
here.
blew by 7%.
So I'm going to tell you guys
And so
first,
I
and then I'm
also
going to
think
put it on the
Reels is
watch
very
list.
attractive, and they're gaining momentum. Click to message.
I'm
They've
going to
got
show you guys
$40
something.
billion in cash, and they're
here's
buying
one.
back stock. Excuse me, a $40 billion buyback, and they bought $10 billion last quarter. And
This
we'll
is
see
equal
what else
weighted
they do this
S&P.
quarter, and it trades at 23
We are
times. It's
below
the cheapest of the group. And to Josh's point,
you know,
actually,
hanging out
they have
below
better growth, the best
these
growth
lows.
of the FANG.
All right,
They're gonna go from
that's not a big
single-digit
deal.
revenues to double-digit
This
revenues
is
in
more
the
so
second
a
half
big
of this
deal,
year and into
right?
next year. And so
Look
I
at the
still think that
equal
one's
weighted
attractive.
S&P.
That being said, you know I've been trimming it because it's had a nice
It's
run.
trying to make a
I
new
do
low of
think
the year.
Amazon,
That's
I think
one.
retail's going to be great.
That's
I really
one,
do. The
okay?
US Prime, the numbers were off the charts.
All right,
The two-day Prime, right? So that'll help. It's all about margins, though, Scott. They did 3.9%.
So that's one, and here goes the S&Ps. You could probably assume that we are going to get back down to this 422,
So that's important.
get below this
AWS,
200-day moving average.
12% growth last quarter. They need to see that accelerate to see the
But
stock
there's a
actually do
real
better.
issue.
Of Jim, like the playtime's over in terms of
When you start seeing regionals, and why do I think this is happening? Like, now everybody always talks about it was a down day. Like, nobody explains why. Nobody explained to you guys why that 30-year bond auction 2 weeks ago came in the way it did. Why it was such a horrible auction.
That's why I'm saying playtime's over.
I'm going to tell you why I think we have some issues. Now, I don't know if CNBC is too loud or not.
Don't they?
I agree
if you
with
guys can even
I
hear
see
it.
a somewhat
If you can't
benign
hear it, I
set of
don't know.
circumstances that can
Thanks
happen
to,
that people may not like. But let's just say take
what's up, Chris? How
Alphabet
you doing,
tonight. Let's
buddy?
say they beat by
Nah,
a little bit. Let's say the
I
stock's
didn't.
up
I
like
was a little.
1% tomorrow, and through the end of the year is up 4%. By the way, I'm overweight Alphabet. I like the stock.
It was a
lot.
little
The
like
point that I'm driving
what
at is I
call
take
it.
what you just said, Scott, at face value, and I agree with it. But it doesn't mean that there's a trapdoor opening up under these stocks.
Hold on. I'll turn that back on in a second. But I had I didn't catch anything today because I was a little leery on like price action. I was watching Tesla. I missed the upside move, and I wasn't and I wasn't sure if the short was there or not either, right? But I'm looking at the longer term, like what exactly what story is playing out right now. It's playing out just like the SPY, all right, and that is seeing if we can hold this 200-day or not. That Apple news is a bit late. I was watching Apple as I was getting a drink because I got that news a little bit ago. So what I think is going on right now, that's what I was getting at. Guys, I think we're not going to have a speaker and we're not going to get this debt deal done. And I think regional banks selling off today right now is kind of telling us that the market is worried that they're not going to get this debt deal done. And therefore, that Fed liquidity program, when they need liquidity, isn't going to be there if there's a government shutdown. There's going to be some issues because of it. Let me take my hoodie and stuff off real quick. Sorry about that. So I had to use the bathroom. All right, so I'm going to keep, like, regionals are still sinking. I want to see here. I'm going to go through this chart real quick and see if we got some room left on this for a bounce, to get short a bounce. Because I'm wondering if, like, if earnings, like, even if they're good, right, them being bad would more so help the case. Earnings coming in bad would help price in a government shutdown, in a sense, right? You'd be able to get that downside ahead of a possible government shutdown. The uncertainty if there's going to be a government shutdown. So I think we're starting to see, come on, like, see, like the euro, it's trying its hardest to bounce here, and I would hope that it would, right? I'd like to get the euro, and again, nothing goes straight up, nothing goes straight down to an extent. I mean, I can't ignore this bullish divergence that is not there anymore. That's because I was on a daily. I was like, wait, we haven't had that much price action yet. So, and even a pullback still wouldn't hurt that much, even if we pull this RSI, you know, get this RSI back into, like, you know, like, get it, like, down into, like, this area here, you know. Even if we pull it down, make a higher, you know, a higher low, and try to get back, you know, try to get this thing going. So we are headed in the wrong direction, that's for sure. Especially if we keep it up, because even at the even if we come back and test this 38.2, sorry, Chris, CNBC's distracting me. Josh Brown and what's her name are getting into it. I forget her name. I know her name, but I forget it. But anyway, I think you're going to start seeing trouble with this government shutdown. That's what I was getting at. I think the market's worried that they are not going to be able to find U.S. to sell 51 billion of 2-year notes at 1,800. All right. Stephanie Link is her name. She's talking about all the good, and that's fine. But you have a government shutdown. Utilities, communication services sector leading the S&P. XLC. All right, so there's the banks. Let's see if the banks start to make a new low here. And we're down 1.5%. So Hemmer has won the Republican nomination for the speaker. Stephanie Link's missing something on CNBC, guys. If anybody's still on here, can you let me know how this sounds?
Is continuing. Seeing that in all kinds of series. And oh, by
if
the
this
way,
is too loud or not, because I want to talk to you guys about what she just said.
Today, the PMIs, the manufacturing hit 50.
So yeah, Emmer wins the nomination for the U.S.
So
Speaker.
We're starting to see momentum in the
if
manufacturing.
anybody could
that
comment,
that can comment
on here and let me know if this is too loud or not,
as well as anything
or if it's perfect, if it's okay. Matter of fact, I might be able to see it. Hold on.
I think the economy for now is good. We don't know about next year. It's too early to tell. But I just think for now, the better economy is going to lead
Check
to
mic, check
better
mic.
earnings, and eventually, if earnings are going higher and they're being revised higher, which they are, then we could have a year-end rally. So
Josh?
talk about next year.
Josh, go ahead. I remind everybody, too, yesterday afternoon, another new note from Marko Kolanovic over at J.P. Morgan. Again, lag effects, right? The full effect of the severe tightening that took place last year has yet to be felt. It goes right to the heart of this conversation as to whether, we believe the economy is as strong as it appears to be. Ackman yesterday suggesting that one reason he's taken off his, long-held short on the long end of the Treasury curve is there's too many geopolitical risks.
There, he just said it. He just started to say it. The biggest risk, we do not get this debt ceiling raised. Maybe they come to an agreement to extend it again and keep extending and extending. I don't know how many times they can do it. I'm sure they can do it as many times as they want. But think about, I forget who put it out, but it was like, I read it about a month ago or so when we were talking about it last time when this was going on, that for every 2 weeks, I think, for every 2 weeks that the government is shut down, or for every month that the government is shut down, it's like, I don't know, it's like a quarter of GDP, or it's like 1% of GDP, or something, I forget. So it is pretty, it's a pretty big deal. So retail banks are showing us that something's not right. That's all. I know it takes me 20 minutes to say something. I'll get used to doing it. But there's a story going on here. Regionals are going back to lows. And it's either nobody wants to buy them, or there is a ton of risk involved in it. So here we go. Damn it, man. We still had time to take those puts. Kind of. See, you would have got chopped up here, and then this extension. I was kind of wondering if we would get down to yesterday's close, getting down to this 420 area. Shit. I know there were 20 cents because I looked at the 22s, I looked at the 20s, and I had the 23s up on the S&Ps. And it looks like we're getting an increase in volume. Again, we could always bounce, but that's a failed hold of that 200-day moving average. Let me make sure it's still right there. Let's see here. So yes, it's dead center. All right, so we broke it. Looks like we're headed down to either yesterday's close or Friday's close. Probably where we're headed. Friday's close. 421.18.
Yeah, because that's why I cite free cash flow all the time. That's why I cite that. I mean, if they're taking $40 billion just to buy back stock, they have a ton of cash that they can settle or do whatever. I mean, and even TikTok.
And isn't that crazy to put into perspective that the equal weighted S&P, guys, is down here at 380. The equal weighted S&P is down there at 380, guys. That's insane. That is insane. So I still think we need to bounce back on a higher time frame other than a 1 minute. So I wouldn't get too caught up in this. This is a nice level that could take us right to the low. So if you are thinking about getting short, you do have a nice increase in volume, but this is the level I would watch, 422 on this break lower. I could tie it with the dollar. Regionals are not making a new low now. Let's see here. Nah.
Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better. Call now for your comfortable retirement.
Here I am talking with no with the mic not on. Anybody that's thinking about the 420 puts, be nimble, because we just looked at them at about 20 minutes ago. They were 20 cents. They are now over 100%. Okay. Oh well, they're at 50 cents now. So well, they're 110, 120%. So any bounce backs to like 422, it's gonna kill them. Watch the premium. Look, 40 or 50 cents, 51 cents, now down to 47, 46. So this is what I mean. Any little bounce back is going to hit you a nickel at a time and get even worse the higher it goes. So be careful. Now's not the time to enter. The time to enter is when we were talking about getting short. If you didn't go short, now's not the time. Unless you want to get yourself some time, that's probably a different story. That's what I would do. Look at that. You're already down 50. You're already down 10 cents on that. And counting. See what I mean? This is why I try to explain some of these things to help you with that don't know about options. Right? If you're not watching the option prices and knowing the high to lows and the liquidity that's with them and how it's going to do once it bounces back. Like understanding the delta. The delta really can help you know how much you're going to make and or lose. You know, every you can split the time from every hour or every day to every hour, and then to every half hour to every 15 minutes. I should put out a video to give you guys the math for that, but that's what you got to watch for, right? The time to get those when we were talking about it up here. I missed this round here. I missed it. So it's all good. I'm not worried about it. It's not that we missed it. I just didn't take it. I just didn't take it. Because like for me, I wasn't like when I buy puts or if I do something like I'm gonna like I don't just throw size on every single one. Like if I want to, like I have a number that I'm going to make in it. If I feel like the market could still be, not really give you directional movement, then I'm not. It's tough. Sometimes it's tough for me to take it with the uncertainty of how the market's moving. It's a nice little bear flag.
Where'd you get in on this? You remember what the equivalent was before the split? It was pre-split, right?
Yeah. I mean, a
long time ago?
A long time ago. 18, and I bought it all the way down to 10. And I fought everybody along the way.
I
Look at that. That takes you right to 420, guys.
8 to 1, I think it was.
10 to 1, I don't know, something to 1, something big to 1. Are you still optimistic?
That's funny, isn't it? Isn't that funny? That's called a move to move.
Easier to understand, and I think that's why they're going to get a higher multiple over time.
Shit, I can't get in it in time. I'm trying. Hold on. I'm still trying. That's it. I can't do it. That sucks. I tried to get short there. It was just too quick. I'd already be out. I'd be out on that limit down. Oh, that's brutal.
Stock's down because of the UAW strike. So that's the short answer. Why does the stock trade at 4.5 times earnings? Because of the UAW strike.
The stock was trading at 4.5 to 5 times earnings before the UAW strike.
No, it was trading more like 5.5 to 6 times, and in historical past, it's traded around 7 times. And when the UAW strike is done, it's likely to be there. In the meantime, what's happened? The reason I lead with that $5 billion of free cash flow.
There's still no way. There's no way. There's absolutely no way.
What do you think they're doing with that free cash flow? They're buying back shares, all right? Share count shrunk year over year 5.2% at well below book value, and they
That's funny, isn't it? We tried there. I tried to pull it up to show you why I thought we could get some downside. I still think we're going to 420. Doesn't mean that it won't come with bounces, but you had to be pretty quick on that because it broke out. It quickly hit that. It hit that uptrend of the flag and then just boom, 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 boom. So.
everybody has a stock in their portfolio that has languished despite great, excellent reports. Okay, so everybody's got it. Just be careful about throwing stones.
Josh, can I ask a question? Are you sufficiently protected now? Can I ask a question?
This could get ugly. This could get ugly. Oh man. Just be nimble out there because
To anyone who thinks, like energy in the fall of 2021, that they're going to languish at these multiples, go ahead. They're just going to buy back shares below book value at earnings yields that are extraordinary. Just let them keep doing it. Eventually, look, if I'm the last person holding a share of GM and I've got $5 billion of free cash flow a quarter, I'll be perfectly happy. Let them buy back all the shares.
Will their weighted average cost of capital allow them to continue to buy back as much stock as they've been able to in the last year or two?
I think it's a great question, and the answer is I don't think so much about weighted average cost of capital, which isn't very high. And again, I point out,
wow, we are so far below VWAP.
about $13 billion. Leave aside GM Finance. The point is not
Here comes the
the point is free cash flow.
here comes the buyers.
Will that free cash flow stay in there? Will it hold in there? That's a legitimate question. To which again, I go to 12 and a half years being the average age of cars on the road. They simply don't last that long.
Look at Tesla trying to break back down, it looks like.
They're being sold. That's what the results just showed us.
I know this is not going to trigger you. You already seem sufficiently triggered.
I'm excited. Come on, Josh and I we get excited about these things.
Cleveland Cliffs. What's up there? 7%. He was
Yep, man, Tesla was the short, man. Fuck. Just when I think, like, you know, the market may not do much, it does. That's a 10-point move, guys, from 220, 223 to my target was 214 and 210. Those are the two levels that I have for Tesla on the downside.
Cliffs is special. I want to talk about it. $600 million of free cash flow in the quarter. Okay, and that's not an unusual quarter. It's not like there's something amazing that went on there. They've spent the last few years reducing capex, reducing their cost to produce steels, while negotiating contracts primarily with the auto OEMs. And Josh made the point that auto OEMs are not just the big three. Okay, Toyota, everybody else is producing cars. And that's showing in the volumes that Cliffs is producing. The selling prices they've got about $1,200 per ton, which is way above spot prices. So people look at spot prices.
Well, it didn't hold yesterday's high, and that worries me on Tesla. Like, you could get some more downside.
Price contracts. They got costs going down. They got volumes strong. They got price.
And just some commentary from Jordan's foreign minister. Says the real threat of Israel and Hamas conflict expanding into the West Bank, Lebanon, and other fronts. Just so you're aware of note in the tyre space, Nokian Tyres just lowering its guidance for the FY at 2023. Nokian Tyres in Finland now expects segments net sales in 2023 to be approximately 1.15 to 1.2 billion euros.
Man, what an easy... You know, when you get up to levels like this, it should be a no-brainer to go short and not think about this, think about that. That's my problem. You know, I think more so my problem is even when we get some downside, I'm like, man, I missed it. Like, oh, I missed it. I missed it. Like, no, there's still room. Like, you can get back down to 420. That trade, that is now... Hold on. Wow, that's crazy. Well, I guess you could have sellers there, but you have a ton of people on the 380 puts for November 17th. A couple weeks away. When does the government shutdown happen? Is that like the 14th, I think?
AEP increasing quarterly dividend to 88 cents per share. That's up at Echo Papa.
And after hours here for Kering, executive post earnings does note North American traffic has been weak on average.
The debt
Just a reminder, we
limit?
did get those earnings
Hold
around an
on.
hour ago, and they were poor across all metrics.
on.
Just Kering executive here, just noting the North American traffic has been weak on average.
Explore endless design possibilities. Define your personal style. Endless hardy siding colors.
CDZI, Cadiz signs agreement with El Paso Natural Gas.
Hold on here. When is the government shut down? That's when.
Want to invest in crypto, but not sure how? Now you can get crypto-linked ETFs in your brokerage account. Choose from BITO, ETH, and Betty from ProShares, the global leader in crypto-linked ETFs. Thursday, November 2nd. Join CNBC's Evolve Global Summit. Learn how global innovation leaders are
November 17th. Okay. Okay. So I'm gonna watch those. I'm gonna watch those contracts. But that's still way too far. I'd be a seller of those all day long. And I wouldn't sell them here. I'd sell it closer.
Bank research at Wells Fargo Security just named the #1 bank analyst for the 4th year in a row by institutional investors.
Here's the headline for CNBC: Bank buying opportunity. Oh, is it? It could be, actually. Now that we think about it, this could be a buying opportunity. Time in sales is green as a mother.
I mean, that's what investors are probably, I'm sure. I'm trying to channel what our viewers are thinking right now. They're like, the regionals are down like 10% in a week. Big banks are down like 9% in a week. Stocks are trading terribly over the last few months. Why do I want to buy them now?
Well, I want to recognize the headwinds. Interest rates are a lot higher than I had ever expected, the banks had expected. It's been much more of a headwind to the deposit costs, the net interest income, the spread revenues, capital markets, and earnings estimates have been cut by 20% in the last year and a half. But I think we're in the middle of the second.
Here we go. Here we go. We get down here. I want to get another buy. If we could just get one more drop, that would be a nice little buy to get back up to the 9 EMA on the 15-minute chart. And I'm a buyer. I like that. Just don't know if we're gonna get that pop that you think we're gonna get. We might. Let's see. You guys want to go for it? See what happens? I'll have it up just in case. Let's watch. $200.
See, they de-risk, but there are still risks that are out there that haven't materialized yet. The likes of which that Diamond himself was talking about today in Saudi Arabia. I'm sure you saw those headlines. How do you react to? It's not like, you know, that's a ringing endorsement to go buy financial stocks today.
Well, look, there's three risks. The three R's would be rates, recession, and regulation.
And a bit further here from the Kering executive, it does note geopolitical risk may hurt consumer sentiment.
You're seeing a lot of tails that are being put in here, but I'm not going to fight the trend. RSI starting to get higher. You have a crossover on a MACD. 424.
himself owns over $1 billion of JP Morgan stock. So I think he's going a little too overboard there with that uninvestable comment, and that's dragged down the stock.
ACB, Aurora Cannabis, now popping. Carly
Are
Bravo.
your own estimates for these banks and their earnings potential at risk? Yes or no?
No, but I think consensus estimates are at risk.
Ray
By
also.
5 to 10%. That's why I say we're in the middle of the seventh inning for these downward earnings revisions. So the consensus has to catch up, and then that'll be a nice floor.
Real quick, Jim.
Dave, it's the day of free cash flow, Mike. Basel III endgame, potentially higher U.S. regulations. Is this going to crimp the ability for these companies to buy back shares with free cash flow?
It already has. You have unrealized securities losses that gone up because of the higher interest rates. Banks have already slowed down buybacks. But back to the comment before, I think the biggest banks like JP Morgan and Citi will be able to buy back more stock going into 2024, and that will also provide us support.
I like what I hear.
Good to have you here. Mike Mayo, and congratulations again, fourth year institutional investor, top bank analyst, large bank analyst. Up next, Mike Santoli with his midday word. We're back right after this.
A lot of weed
Just some
stocks are
Asian
jumping,
news
guys.
here via Nakai. Japan reportedly weighs a one-time $260 tax cut to ease inflation's pain. It does note with the cash assistance and relief package, it is seen at totaling $33 billion. Just regarding some of the details here via Nakai, it does note that the Japanese government and the ruling Liberal Democrat Party are considering a one-time tax reduction of 40,000 yen, or as mentioned, $267 per person, as part of an economic stimulus package to be compiled around early November. And separately, an update out of Washington. According to a lawmaker, Republican U.S. Speaker candidate Emma is falling short the 217 vote threshold, and voting does continue.
Voting does continue. That's weird. So I'm gonna wait till we get to this.
Groceries for the week to completing online assignments. We rely on tech tools for pretty much everything. Ensuring
So if we get down here,
create opportunities for my kids and yours. That's why I'm so grateful our leaders continue to stand up for tech innovators, protecting America's competitive edge for generations to come.
so we were here this morning. I was expecting a pullback to the close. I didn't think it would be like this. This is crazy. Funny. God damn it, man. You know, this is why, you know, you get into these points of resistance. Just take the short. You know, I didn't. I was trying to get the stream figured out. I just didn't. It is what it is. You know, every time I will watch and I will learn. I wasn't sure what type of day we were going to have. I don't know what exactly is going on. I don't know if they're trying to hurry up and price in. I don't know. That's a failed hold of the 200-day moving average. I mean, I know longer term, like, I think there's a worry. I'm telling you guys, there is a worry that there's going to be a government shutdown and that you're going to have a banking issue because the government's not going to be open because they can't come to a deal. Because look at KRE. So, you know, KRE is a sign of risk. And I feel like this is the market telling you something's up. I mean, we already know it. We've called it. We get this data tomorrow. Today's Tuesday, right? Today is Tuesday. So we will get this data tomorrow to let us know if this is going to continue higher or not. And I'm sure it will. If it does, that tells you spending, right? That tells you people don't have much money and the banks aren't having much money. Like, you know, what are they going to do when unemployment starts to tick up and they don't have checks coming in direct deposit? What are they going to do then? So I see that just continuously climbing if we get that far. I don't know. Does the Fed cut? My thoughts were we pull it back the second half. But it sounds too easy. We might bounce. You know what? Oh, I wanted to show you guys this. I'll do it on the watch list, or for the few people that are here now, I'll do it now. So check this out. Check this out. I want you guys to see something. You guys see this? Let's do like a weekly chart for starters. This pattern is just like 2010. You know, obviously it's bigger. There's more going on. We're at a higher price, so the movements are going to be a bit bigger. You're going to see this. You're going to see like this little double top here, and you're going to see how we put in like this little double bottom, and we put in a lower high, and we pull it back to this area, and then we start to like climb out of it. Let's go take it to 2010. Let's go back to 2010, baby. Let's go show them the pattern we were already in. So doesn't this look familiar? Doesn't that look familiar, guys? Let me show you. Let me paint it out for you. Let me paint the picture. There's your left shoulder, right? There's your head. There's your right shoulder. There is your neckline, right? We have all this stuff right now, right? Let's go back. Right? Left shoulder. Left shoulder. Come on. Head. Right shoulder. Pull it back. Double bottom. I mean, if you want me to put it on a daily chart so you can see the head and shoulders, I am on the SPY, right? Left shoulder, head. Left shoulder, head. Right shoulder, or right shoulder there. I don't know what's going on. Why does it look weird? That is true. Why does it look like not like... It doesn't... It's still the same. It may not look exactly alike, but it's still there. That resemblance is still there. That's so weird because I was able to put out a really nice head and shoulders on this prior to this downside. Hold on. It might have been the cues that I was talking about. Oh my, why is this thing not... It's not letting me click now. Yeah, so... Left shoulder, head, right shoulder. But anyway, let's focus on what is taking place, right? Look, we sell it off. We sell it off. Left shoulder, head, right shoulder, bottom, double bottom here, right? And then notice how you put in, and obviously we've measured it with the 38.2, the COVID low and stuff like that, right? You'll see how you have your pennant here and all that fun stuff, right? Well, let's go look at 2010. It looks just like it, guys. I'm telling you, it looks just like what we have going on right now. Like, you can't say it. I mean, you can say it doesn't. And where would we be? We're right here. And this is where we would be heading. Left shoulder, head, right shoulder. This is the Russia invasion. This is our October low. And look what day this is. 10-3. 10-3. A few days before our low of last year. And where are we? We're right here. Of course, it did it all in 1 year and went to new highs. But this could be the start of a pullback. In a nutshell, even on the daily chart, it looks just like the pattern we have right now, guys. Looks just like it. I don't know if I've heard somebody talk about 2010's pattern. Like, I did it over this weekend. Oh my gosh. I went over the charts this weekend and I was looking, I'm like, have we, like, I was just looking because you got to do your research. And I was looking and I'm like, is there any time in the past that looks anything like what we have going on right now? I was looking at 2008. I was looking at 28. I was just looking at all different years, trying to find something relatable. And that's what I came up with. Right? This did it in a year. It's taking us 2 years, right? Twice the amount of time, twice the price action. But it's so, like, dead on, guys. Right? Like, it is. To me, it is. It's a little different, but it's still the same. In a nutshell. In a nutshell, it's still the same. So let's see. I'm curious to see if this stage happens, we bring it back, things get good and calm, we pull it back, still a bit of uncertainty, and then look what happened the next year. You still pull it back in here, so you still kind of have trouble getting out. And what it does is it's putting in this pennant here, right, that you break out of, and you pull it back. And then you go higher. So if I had to, I would say we are in the pennant phase and we're working our way down here. 1, 2, we go up, put in the pennant. So yeah, that's all, guys. It looks, the resemblance is there in my eye, right? We came up. Let's see, like, this is the pullback that we're enduring right now. Let's see, I may be crazy. I may be crazy. I know I'm crazy. It's not maybe. I know I am. But this is like the closest resemblance I could get to what we have going on right now. Head and shoulders. We pull it back. Got a double bottom. And we're just, climbing the fibs. If you don't know, from COVID low. No, not duplicate. I don't know if anybody else can see what I, like, does anybody else see it? Am I the only one that can kind of see, like, the resemblance of what we have going on now? And that's like Morgan Stanley. I called it like years ago, but it happened a lot later. Look at Morgan Stanley in 2020 or 2000. Come on.
on a rolling basis. We're sitting slightly below there right now. That's something traders are watching. The Dow Industrial's up about 0.25%, 92 points, 33,029. The Nasdaq Composite up
Come on.
roughly 0.2%, 13,040 the last trade there. So again, losing some steam in this midday part of the session. Now, one part that's been gaining steam throughout the course of the last few weeks has been Bitcoin.
I don't know what's going on.
Look at this chart over the last year or so. We have now topped 33,000 at one point today, depending on which metric or which exchange you look at on Bitcoin. We were north of 35.
How about this?
For each Bitcoin, it's up about 8.5%. This is the highest level in quite some time, going back to better parts of the part of this year. So Bitcoin, keep an eye on those. It's been a
It looks better on. See, I'm trying to click and it's not working. Like,
broken above to that level here. So we'll watch Bitcoin prices. And then on the earnings side of things, generally speaking, most of the companies that have reported so far today, and there have been a lot of them, have been positive.
it's not letting me do it.
Companies like 3M, though, up 5.5%, General Electric up 6%, Sherwin-Williams, which is now down on the day, and Logitech, all not only beat, but then raised their forecast.
Come on.
And then RTX, the company formerly known as Raytheon, United Technologies, they merged big defense aerospace contracts.
There we go. Finally.
They beat on results and then added $10 billion.
What I was going to show you guys, sometimes you'll have things in the past that look like the future. So, this is Morgan Stanley in 2000. I looked at this on Google, so we'll see. You have a nice Head and Shoulders there. I don't know how different it looks here. So what I was pointing out was this rally COVID going higher. And I think it was COVID. Hold on, Turkey. Okay, you don't have to yell at me. My cat yells at me. I think she sleeps and then has like a nightmare or something. I don't know. She likes to talk. I'd have to pull it up on Google, I guess. Because what like Morgan Stanley has here is kind of what it looked like in the 2000s. At least on a closed line, like on a line chart, there was a big resemblance in Morgan Stanley to the 2000s. That ended up pulling back. Yeah, it's all good. I'll have to go. You know what? Let's do it. Let's go to Google. Hold on, Turkey. I'll get it. I had a feeling it was going to do that.
What worries me, Kelly, is that there is just a certain amount of fiscal incontinence in Washington, D.C. We're running.
So let's go to the max. So look at this. This, when was it? Was I in? It was a bit different. How can I make that bigger or no?
There's absolutely no discipline on spending or deficits, which means that the supply of treasuries could explode.
So all that said, Brian, let me ask you kind of a simple question first. If you think 5% is the top of the range,
Kelly, I agree with a lot of what Jason said. There's no reason to believe that 5% is magical.
15% on the day. Wow. Baby, okay, hold on, love. I'll get it. Just hang on. So, what I noticed here was... Oh my gosh.
The rest of it is cheaper. It may not be the top, but the long bond has some work to do, I think, still to find the top of a range.
okay, so maybe they both think things could even go a little bit higher from here. So good, I want to play devil's advocate.
Okay, here we go. We're in there. We're in there like swimwear. COVID, right? This could be your COVID drop at like 1998, right? Abby, I'm gonna give it. Just give me 1 second, boo-boo. Just hang on. Okay, hang on. Give me 1 second. Come here. You're not starving. You have dry food. You have food. It's not like you don't have anything. COVID, right? There's COVID. right? You had that little pop go up, and then it comes down. I know it's hard for me to show you. There's your pop, and then it goes up again, comes down, and then here is your pop, and then look, there's your pop. It's a little lower. Okay, hold on. Pulling it back, and then it rips, right? It goes up, pulls back, and then it rips. I told my girl literally that we were here in this like time frame, and I was like, this looks just like the prior COVID, where you had like this COVID drop here, right? There's the top, you drop it, the top, and then you drop it, and then you had this like, you know, this bounce and then pull back for the rip higher, and then that's what you got here. So I definitely called that. I remember that was in like November and of like, I remember this. I remember being outside showing her. I'm like, look at Morgan Stanley then, and look at what's going on now. Morgan Stanley was a buy, and it kind of did it. It didn't finish the pattern out exactly, but you know, nothing's going to be exact. But I thought that was really cool to notice this big COVID drop. That's not COVID, but you know, you guys know what I'm saying. So, come on, let's go eat. Come on. This is probably the biggest thing that you should, if it's on here.
Kelly, it is the largest and most profitable plant for General Motors that the UAW has.
Come on, man. This fucking AirPod shit, dude. You gotta be kidding me. Hopefully you guys can hear it, because this, you guys gotta remember this. This is going to create volatility that's going to be here for a while.
Say the least. And like you said, a lot of people came of age during it,
And
thinking,
of
yeah,
course,
it's
it
always like
connects
this.
as soon
Uber
as-
and, you know, whatever. Just, you don't need to make money. Jason, Steve, thank you both for your time today.
Now been stopped because of UAW strikes. And by the way, they've got a couple other plants where they've either stopped production or have had to curtail it.
Basically, it's not 2008 to 2020 anymore. We're in a new phase of quantitative tightening. And that's going to create volatility. That's not going to, like, because what volatility is, and like what kind of quantitative easing and quantitative, well, what quantitative easing is it kills volatility. How does it kill volatility? Because there is always a buyer for that seller, right? Instead of areas of no buyers or sellers, right? Or no sellers. Quantitative easing puts in that extra buyer, so you just go up, pretty much. There's no volatility. It doesn't mean you have to go up. It's just there is no volatility, because there is not that buyer for every seller in quantitative easing. Quantitative tightening is another story, and that's where you can really make money, if you know what you're doing. If you can just, you know, just put the position on and don't, you know, size yourself up to the gills that you can't stay in the trade, or you start thinking too much about it, or whatever. You know, I want to say you can make more money in tightening than you can easing. I mean, I guess they both have their, because you know, if the Fed's doing, if the government's, you know, if you're in a state of quantitative easing, then, you know, the Fed's stepping in to buy. So you could just go long everything, long dated calls, or just, you know, long stock and equity itself. Now's not that time. Oh, the little girl coming to join us. Hey, what is it? Well, maybe we're allowed to start heading to VWAP. I thought about getting some calls, but I never pulled the trigger on them just yet. Because I'm not going to fight the trend. Equal weighted S&Ps are on their ass, I wouldn't try to front run the move. Where's Spotify at, actually? That could leave us some good opportunity. Look, I can't even type now because she's laying here on my stuff, and you're fine. You're okay. So, don't knock over the Red Bull, please. Alright, so it's still up at highs. Let's see. Hi. Hello. Hello. You know I was gonna get it. Let me get it. Oh wow, I wasn't sure if we were going to break this level or not. So it was about an hour and a half when I started getting tired. About an hour, like a little over an hour. Let's see what we do when we get up to this 200-day moving average. Damn stink bug got in here. You hear that? You hear the... Alright guys, so there's a perfect rejection off the 200-day moving average. Perfect rejection off that 200-day moving average, everyone. Let's see here. What are you doing, Turkey? We got up above it. We pulled. This is the second time we pulled away from it. How did we do on the 1 minute?
Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
This is going to be your rejection area. If you guys are thinking about shorts because you think, for whatever reason, this is roundabout where your entry would be, right around 423. We're not there yet, but we are pretty much getting there. That high 422 mark. If I were short-minded, that's where I'd be. Yeah, 422.50, 423-ish. Yep. All right, you sons of guns. We are getting somewhat of a nice setup here. I'm going to let you guys know if I take my entry on this. I probably will. So look here. Do you guys see what I'm looking at? Do you want me to zoom in? Do you guys see this? Do you guys see that? That little line there? Okay, what happens is, I don't mean, look, it's already pulling away from it. So what this is a daily chart. And this daily candle bumps into this turquoise line, which is the 200-day moving average. So what we have here is a failed breakdown. Well, we have not a failed breakdown. We have a breakdown and a failed break above and hold of this turquoise line. Can you see it? It's right.
Hey, California's DMV has suspended cruises, driverless taxis here in San Francisco, and that is effective immediately.
I was going to zoom it all the way in as far as it could go.
That the vehicles are not safe for public operation.
Right there.
Also says that the company misrepresented information. Now, this
So you just rejected that.
the San Francisco streets here, they are
And what you see here on the right hand side, you probably can't see it, but I'll show it to you. You're going to miss it. Well, if you have what we call time and sales and level 2 up, you will notice how heavy and red it is and how much selling is going on right at that area. So this is a nice, let's see if it breaks down here, and that means we'll grab some puts and make some money. All right, that's a break, pull back, test it, get us some further downside. Abby, I'm coming, Turkey. You have food, you have everything you need. Dad needs to buy some puts. All right. 420 is going to be the target. We'll see. We'll see if we reject it. If we continue the rejection here. I think it is. So I'm going to grab some and see what happens. Let me actually... Abby, you have food, you have treats, but yes, I will get you some more. Let's see. So that's my plan. I'm going to see what we do here at this area, and if we end up breaking it, or we end up rejecting it and whatnot. If we can't get above it and hold it, I will be getting short. I will put in the chat that I'm getting short, and I will come on the mic and let you know. I'll be right back, guys, and we'll go through these levels and for earnings and stuff like that, so we can come up with a game plan for tonight and tomorrow. Give me 1 second. I'll be right back. I'll turn some CNBC on. That way you can sit back and relax and enjoy the show. And I will feed you levels, and all you have to do is press enter or exit. If you can't do that, I don't know what you're doing then, right? If this, then that. This is where we get long. This is where we get short. I'll be right back. You know I'm just kidding.
Welcome back. The busiest week of earnings season ramps up with two big tech names after the bell. We're talking Microsoft and Google and Visa in today's earnings exchange. Portfolio Wealth Advisors Lee Munson is our trader today. Lee, welcome. It's good to see you again. Appreciate it. Let's start with Microsoft. Shares are up 37% this year, thanks in part to its big push into AI. Goldman also highlighting Azure's growth and any early indications of Copilot adoption as key numbers to watch. They also finally closed that acquisition of Activision, so that will be something analysts are keeping an ear out for. Lee, what do you do with the stock here?
You know, here's the thing. They've got to come in with at least $55 billion. They got to beat what the estimates are. They've got to come in hot. I tell you, let's get the hype versus reality. Goldman's right. It's all about Azure. It's all about that 70+% margin on the majority of their revenues and profits. I love Copilot. I'd love to have, subject verb agreement on my Word documents. I care about the whole hype about AI is going to start writing video games. All of this is about, are they going to grow cloud and are they going to keep that 70+% margins? Everything else is just noise.
Yeah, I tend to agree. That kind of sets us up for Alphabet as well, having a hot 2023 up more than 55% this year. RBC is warning of some weakness in ad weakness in search, though, and also says YouTube ads have gotten a boost as people go searching for content during the Hollywood strikes. On the margin impact of job cuts also on their radar. What about this, namely?
I love YouTube. I know those margins are fat. The problem is it's 10, 11% of the revenues. If YouTube was like 25, 30%, I'd be all over this. But you have to believe with Google. And by the way, for full disclosure, I own a little bit. I've owned it for a while. This is all about ad growth. And remember, the ads on Google are core ads. It's not like, Meta or Snapchat where, you get a lot of volatility in spend. So I think that you have a decent ad environment going forward. And I'm not convinced that ChatGPT is going to eat all of core ads. The real thing, if you want this stock to keep going higher, you've got to have cloud become more profitable. It's a third-rate cloud platform. We need to see it make money.
Interesting. So I hear the same emphasis for Microsoft and Google, really all about the cloud for both of them. That brings us to Visa, totally different. Shares are up 12% year to date. Good barometer, obviously, for what's going on with the economy and the consumer. Mizuho says full-year consensus revenue expectations are too lofty, especially as inflation moderates. That'll be a nominal hit. The firm also notes ongoing disruption in profitable businesses like travel that could be at risk. And of course, the dollar here, a big story. Cross-border spending was a help in the recent past, but what now? What would you do with this stock, Lee?
I would just stay away from it. Here's the problem. Mizuho's right. I think everything is too rosy. This is all going to be about the macro. Visa can't escape the macro. It's a great company. All it does is print money. People think it can do no wrong, but its growth rate at 10 or 11%, like even if it keeps that, we've got to get the personal consumption expenditures to continue to inflate. And if we have any little slowdown or any type of little recession next year, people are going to look at Visa and say, why are we paying such a high multiple? I would rather, this is like one of those classics, like a Starbucks or like Nike a month ago. Buy it if they have bad guidance, buy it when it's down, but why pay a premium for it, especially going into next year?
All right, parting thought on the markets?
I love the market right now. I would like to see the 10-year trade above 5% longer than 5 minutes, and I think we could see the low come in. If we saw pricing of a hard landing, like at 4,000 on the S&P, I'm backing up the truck and getting crazy.
But here, do you back it up or do you wait?
I would buy here. I'll tell you why. I bought at similar levels earlier in October, but if I hadn't, about 4,200 to 4,250 is a great place to commit more capital, but put half of your extra inventory that you want to buy. Around here, I think, is a great part if and need to get some money moving.
All right, 42.32 is our level at the moment. Lee, thank you. We always appreciate it.
Thank you.
Lee Munson. That does it for The Exchange. For more analysis on markets and the economy, you can sign up for my newsletter in one easy step at cnbc.com/newsletters or scan that QR code. Coming up on Power reporting after the bell, Snap. Shares fell nearly 24% in the third quarter, but we'll get the lone or rare bullish case. Dom is getting ready. I'll join him on the other side of this break. See you on Snap. Welcome to Power Chew. I'm Kelly Evans. Coming up, Meta facing a new impact on kids and teens. The suit alleges Meta's services are designed to be addictive, and the company has lied about it. General of Washington, D.C. Social media, our contrarian week continues with a look at Snap. 38 analysts covered the study rated one of those brave bulls.
All right, but first a check here on the markets overall. Earnings are certainly in focus this week, with the Dow Industrials now actually trading 33 points, 33,069 the last trade there. With regard to some of the big movers that you are seeing, earnings related, a couple Dow components in 3M, Coca-Cola as well. RTX in the mix up about 7%, due in large part to a 10-back program there overall. The former Raytheon, after those
from those CEOs and get the traders' take on some of those names, specifically those in our 3-stock lunch. Now, we are also looking ahead to some key results after the closing bell today, namely tech giants, Microsoft and Alphabet. I guess, though, technically it's communication services. Still, though, you get the point. 2 companies with immense on the overall market. And by the way, our shares of TransUnion hit a 6-year low, right now on pace for its worst day ever, TransUnion stock. Its guidance cut due to weakening macro environments, saying that lenders are tightening credit on concerns over the job market. So right now, TransUnion shares have lost roughly a quarter of their value, Kelly, just so far intraday today.
That feels like a pertinent development for the markets, but they're shrugging it off largely. For Meta. Today, more than 40 attorneys general filing suit against the company. The main allegation that Meta designed its products, Facebook and Instagram, to be addictive to younger users. The suits also claim Meta has misled the public about those dangers. With us now is Brian Schwalb, Attorney General for Washington, D.C. Thank you for joining us. Welcome.
Appreciate you having me.
What does the success of this lawsuit hinge on?
Well, the lawsuit that we filed in the D.C. Superior Court here in Washington, D.C. alleges deceptive and unfair trade practices under our Consumer Protection Act. We are seeking to hold Meta accountable for engaging in deceptive and dangerous business practices, putting out an addictive product designed to hook young people into spending more time on their screens and creating massive amounts of harm. Our lawsuit will seek monetary redress as well as injunctive relief to make sure that Meta changes its practices that are otherwise causing great harm to residents here in the District of Columbia and across the country.
You know, Meta would probably, I don't know what they would say, but there are a number of social media apps parents are concerned about where they see these behaviors. Why not go after Apple? The iPhone seems to be the portal to everything.
Look, we have a tremendous amount of evidence and information that's been developed that shows that Meta knowingly has designed its products in a way to maximize its ad revenue by addicting young teenagers onto its product. It wants to keep eyeballs on its platforms for longer periods of time, and it does that in a variety of addictive ways. And all of that is in furtherance of putting profits over people. And because we have the evidence to demonstrate that Meta has done this, I, along with attorneys general across the country, in a bipartisan way, have filed lawsuits to hold Meta accountable.
Brian, it's Dom here. I wonder, Meta has said that it has taken steps, that has put remedies in place around, I think they said 30 of them, application-type adjustments or alterations that are there to help safeguard against those things that you are suing over. In your mind, what exactly would be success on your front and the other attorneys general about this? What would Meta have to do other than what they claim they have already done to protect younger adults and teenagers?
Well, we know that Meta for many, many years has known full well what type of adverse impact its apps have had, its social media platforms have had on young people. And has exploited the addictive nature of those apps to generate additional profits. And so part of what Meta is going to have to do is going to have to compensate for the harms its behavior, its knowing behavior has created. More importantly, though, is the injunctive relief we're seeking. We need the Meta to change the way it's rolling out an addictive product to young people who are particularly susceptible. The teenage brain, developing as it is particularly susceptible to addiction. And we hear time and time again that teenagers wish they could get off of their screens. They wish they could get off the social media platform, but like an addiction, they can't. The algorithms are designed to keep them on for as long as possible, and when they're off, to lure them back as quickly as possible. And we need that type of behavior to change.
Do you think a successful defense could be one that says, you know, yes, we designed our products for maximum engagement, but it's ultimately up to the parents or to the individual to, you know, self-regulate?
I don't think that's going to be a successful defense. We have seen how dangerous addictive products in the course of our country have been ultimately regulated and made sort of obsolete by virtue of the fact that lawsuits sometimes and regulation puts those dangerous products out of business or makes them much more difficult for people to use. And you can think about whether it's Juul and vaping or cigarettes. We know that addictive products by themselves hook people, and it's not always about young people or their parents being able to keep them away from the addictive enticement of social media platforms.
And what would satisfy the harms done here? Could this be a financial settlement of some kind that services and support and that kind of thing? Do you want changes to the product? Do you want differences in the age of people who can access it and how that's verified? What are the remedies you're seeking here?
So we are certainly seeking monetary remedies to redress the harms that have been caused, but most importantly, we're seeking injunctive relief to cause Meta to change its business model that preys upon young people through addictive technologies. And that can be through a variety of changes to the business model. Certainly, there needs to be better, clearer disclosure to consumers about the risks and harms that Meta has known about. But there are also changes to what is essentially an unfair business practice of hooking teenagers, a very valuable market, onto their social media platforms simply to generate more long-term ad revenue.
And before we let you go, there's a fine line, competitively speaking. We know that the Chinese Communist Party is dealing with the same kind of issues with their social media companies. We're dealing with similar issues here. But in the end, we have a competitive landscape to navigate as well. So how exactly then do you kind of toe that line between holding firms accountable, yet making sure that they maintain their competitive edge in a global marketplace, especially in technology?
Well, I believe that great companies can do well, can make money, and employ lots of people without putting teenagers at risk. And successful business models do not depend upon preying and seizing upon the vulnerabilities of young people to addict them to your product. So I'm confident that.
All right, so we got a double top here up at your 200-day moving average. We're sitting right where we opened, guys. That's I would more look at it that way than anything else. I would also understand that we are not trading above VWAP, but we are now trading below VWAP. Yesterday, like the bounce that we got yesterday, above, right? We dipped below it briefly, and we're still on an uptrend. Yes, it's hanging with VWAP, but as you can see, we're above VWAP, and now below. Do we start the downtrend? I'm not sure if we do. I think it's more so to do with, how do these earnings come in, right? It's more, I want to say earnings for now. Like, we have a bunch of bad news. We need to take, the market needs some kind of good news. You got a brief glimpse of good news with a nomination for the House. That's one. Two, we have mega cap stocks on earnings, right? So I think so far earnings have been okay. They've been decent. It has been banks. It hasn't been really many. You haven't really had any big tech other than Netflix just crushed, and then Tesla did awful. So we need some good news, right? I don't like this. Images.
From a longer term perspective, and that would be worth kind of getting into maybe
No.
into position by position. What types of names go on that kind of shopping list?
So at Rockland Trust, we're big investors in really high quality companies, and one of the companies that sort of is focal point for us today is ExxonMobil. The recent deal announcement caused the stock to kind of pull back a little bit. We feel very constructive about the transaction and the outlook for oil prices over
Oh, come on.
years. We think the commodity is going to be in demand for a long time to come, and this particular deal gives them a real focus.
It was Life Sciences.
Why was it removed?
Now below $68.
Come on.
That press release reversing completely.
About 3.3% right now, so we like that one a good deal. In addition to that, we like
Did he just take a dump right on the thing?
Visa today is a great company with a price to earnings multiple that looks a little bit rich on its core, but when you compare it to itself over history, it's actually reasonably compelling relative to its historical multiple.
There was news with Anheuser-Busch and UFC signing the biggest deal. This is the biggest deal for the UFC. I'll find it. Just give me 1 second. Yeah. Well, we know pretty much what we have. You know, I have it. It just doesn't have Google on there. It does. It's the one I have just doesn't have Google. So. Oh my gosh. This thing's just a pain in the ass. I don't understand. So, Microsoft, Google, Visa. Google's not on here for some odd reason. I don't know why. But so we'll go. I'm gonna go see if I can get some analyst stuff for us so we can see what we expect and all that stuff. See how they did last year compared to this year. We'll go get our levels and all that fun stuff. If we start closing below, you know, we start seeing some sell side volume come in here, I would take notice. Because, you know, it. I don't know.
All right, David Smith at Rockland Trust. Thank you very much, sir. We'll see you soon.
Thanks for having me, Dom.
Coming up, One-Way Wall Street. Analysts covering some of the big
Abby, baby, hold on.
pretty in step with each other. Whether it's collectively bullish or bearish, it's pretty hard to find a contrarian, but that's what we're looking for this week. Anyone who's trading.
Oh, that's a smaller pop. But what is it up year to date? I'm just curious. Because, like, most people don't. Oh, it's down on the year. Wow. Not good. Not good, not good, not good.
What if we could connect people to new possibilities? Turn thinking into a way forward. Solve problems before they become a problem. And share the future with everyone. We can. At WWT, we connect businesses to technology to make the impossible possible. To reach better decisions faster. To accelerate progress. Together, let's make a new world happen.
I can't believe I missed that downside. I hate when I put levels up and I completely forget them. Completely forget about them. So what I'm going to do is I'm going to get us some like analyst expectations and stuff like that. See how they did last year and kind of have a game plan for Google, Microsoft, and a few of the others and get levels for them. If you guys have any questions, ask away. If you guys haven't done so, if you could just see if we can get to like 10 likes, something like that, something pretty easy, that'd be really awesome. It would help somebody find us that would like to be here and trade with us and ask questions and all that fun stuff. So and if there's anything you guys would like to do, just let me know in the chat, and we can go over charts. We can do whatever. So let's see how Tesla's doing, and then I want to go back to ARM. Okay, so Tesla is holding. It's back up above the 200-day. Sometimes you got to go back. Even though it's a longer-term moving average, it will still poke its head up and stuff like that intraday. Believe it or not. But it will. So it's still under VWAP. Yeah, she's stuck underneath a VWAP, unfortunately. Alright, so we just tapped above VWAP. Coin is still going to the downside with some volume. This was the area that I said, alright, if you think you want to be long this name, this would be the area to get long. Right? It's like 81, 80, 50 area. Let's see what Tesla's doing. It's still below. Tesla's just in a consolidation right now. Not really moving higher or lower. So bored, I'm getting tired, guys. So yeah, I'm gonna get some of this earnings stuff out of the way and get prepared for it. Just want to make sure I have everything up and ready. What a rip.
fundamental catalysts, right? Regulatory type situations, legal situations, flows into mutual funds and that sort of thing. So it's something to keep an eye on.
Absolutely.
All right.
Yep.
Auto loan defaults. They've risen to their highest level in 29 years as interest rates and borrowing costs price many Americans out of the market.
Wow.
This is a big deal because could it be the canary in the coal mine for
TransUnion.
elsewhere?
It's experienced. Some of these, the companies facing this segment of the market are crying uncle. The real question is just how does this spread to what degree?
And at what point do the costs for cars go lower because of the
Yeah,
demand
used car prices already down 18% from the highs. A new survey from Resume Builder finds a third of Gen Z has made career-related decisions on advice from TikTok, and 88% say those decisions made a positive impact on their life. I get this, makes total sense.
I don't do career advice on TikTok or Instagram. I would much rather learn how to clean my kitchen with
Clean
safe
talk.
materials. Yes,
I
on
like
Clean
that too.
Talk. Exactly.
And 4 men charged in the theft of 2 million dimes from the U.S. Mint in Philadelphia earlier this year. If you're keeping score, that's $234,000 worth of dimes that weigh 2 tons. And they didn't even get it. All the dimes were strewn across the parking lot.
It's just a heavy take for sure. All right, guys. Thanks for watching Power Lunch.
Should have done quarters. Closing bell starts right now.
All right, welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with stocks finding some traction after 5 straight losing sessions, with old industrial economy stocks bouncing on decent results ahead of the crucial start of mega cap tech earnings season in the next hour. Alger's Anchor Crawford owns a number of those mega cap names. She will join us with her take coming up. Bond yields, meantime, they are steady. Remember, we had that 10-year click above 5% early yesterday. We're now down to about 484, although no further real declines in the yield. Oil down for a 3rd straight day, now back into the low 80s on WTI crude. Small caps have been outperforming much of the day. Banks, though, continue to lag. They have certainly been pulling up the rear for much of the last several months. We begin with our talk of the tape. Is the 3-month market pullback driven by macro and interest rate concerns running its course as the final earnings season of the year gets underway, or will the bulls remain penned in by higher rates and fears of slowing growth and whatever else we can think of? Let's ask Adam Parker, Trivariate Research founder and CEO and a CNBC contributor. Adam, so I don't know. Looks like people trying to look on the not so negative side. Yesterday, bit of a failed rally. Today, yields are quiet. Markets able to maybe seize on some of the fundamental news. Are we able to go from macro to micro at this point, do you think?
I mean, during earnings season, some stocks really only give you 4 updates a year, right? And the rest of it's all macro or factor betting. And I think we're getting some mixed to positive results in aggregate for the earnings season. So do I think we can get back in this Goldilocks period where we could dream that they're going to stop raising rates and eventually there'll be a combination and in the interim growth is okay? Yeah, I do. And I think we'll end up the year higher based on that.
You know, the key question has always been, is it just another growth scare where investors are over anticipating a recession or a steep slowdown, or are rates just going to, hasten the day when we actually have to bring it here and now? And it's inconclusive evidence, but there's nothing to say that the soft landing has been called off.
Yeah, of course. I mean, if you wait long enough and you just forecast 17 of the last 0 recessions and then eventually you get one, you could say you're right. I mean, I'm not saying you, but one could say that. Yeah. I mean, we'll see. I don't think rates, the 10-year doesn't keep backing up forever unless growth is good, right? And closer and closer, that 2-year and 10-year getting closer to the same level, and we'll see what that means. I could see people wanting to normal shaped curve, backing up a ton while growth softens.
Right. Yeah, you wouldn't think, or at least you wouldn't want it, certainly, if that were the case.
That's
something would be blown loose.
That's
right.
a bad cocktail.
We do have some breaking news, though, on Qualcomm. Christina Partsinevelos is here with that. Hello, Christina.
Hi, Mike. Well, Qualcomm aims to bring AI to the edge. In other words, personal computers, local servers, and smartphones. And it plans to do so today with the announcement of 2 new chips. First, the Snapdragon Series 8 Gen 3, long name, but for high-end Android phones. And secondly, the X Elite chip for PC PCs and laptops. Both will help run generative AI applications without having to rely solely on the internet. My colleague Kif Leswing had an exclusive interview with Qualcomm executive who said the new smartphone chip can generate an AI image in less than a second versus last year's model, which took about 15 seconds or so. So that means shoppers will no longer be asking, how great is my camera or how much memory do I have, but rather, what is the speed of these AI applications? No mention of Apple, though, in this report. This second product is going to be an ARM-based CPU chip for Microsoft-powered PCs. Qualcomm CFO saying it'll make them the new CPU leader in mobile computing, and says it's 4.5 times faster than Intel's x86 chips, and will also be introduced in mid-2024. Recall just yesterday, Reuters reported that NVIDIA is also building a CPU chip for Microsoft-powered PCs, AMD as well. So that means a lot more competition, not only for Intel, but also Apple, that is growing in the space with its own custom chip just over the last little while. But for more on all of these products, Qualcomm CEO is going to be joining us on CNBC at 4 p.m. Eastern for a first. Mike?
Christina, thank you. Adam, I mean, you know this space really well. I mean, what to make of it in a big picture sense where these companies are kind of trying to, I guess, go closer to the end user in terms of the AI capabilities? NVIDIA yesterday with the PC chip development news as well.
Yeah, look, I mean, we're in the early phases of a 10 to 20 year trend, and it's going to be a trend that's going to help compute grow, and you're going to have semiconductors at the center of it. So it's not, NVIDIA will be best positioned and will do the best over time, but there are multiple aspects to it and a lot of competition. I think the easiest thing to say is everyone wants to compete against Intel because they've been basically, let's say, the single worst steward of capital of any public company in the last 25 years, and on top of it, hubristic. So it's been very easy to go in there and gain share from them, and I'm not surprised to see NVIDIA mention that yesterday as basically a superior company over the last 10 plus years at a minimum. I think some of these other things on the phone, we'll have to see at what the competitive landscape looks like. But obviously, there's a number of companies that'll be participating.
Yeah, at some level, you feel like, the added capabilities are kind of table stakes. I mean, the things always get better. They always get faster.
So I'm not sure, where the incremental share gain comes from that because somebody gets priced away. But I think it's fair to say if you came into this year thinking the semiconductor industry grew nominal GDP plus a couple, that number's now a nominal GDP plus 4 or 5 just because compute's going to gain share of the total bill of materials for almost all these devices. And I think that's partially why these things are trading at higher multiples because their long-term growth rate's just going to be higher.
There's a way of telling the story of this year in the markets in general. A lot of people are saying it this way, which is, you more or less had just kind of a sort of a bear market rally or a very strong rally off the lows a year ago. And then beyond that, everything else has kind of rolled over, whereas you've had the AI storyline or anything that touches AI and mega cap tech has managed to keep things going. We know this, right? First of all, if that's true, it would seem to at least allow for the fact that the rest of the stocks, if not to carry the market, that there have to be some opportunities or at least some bad news already priced in on those levels.
I think that's true. I get that question a lot. More of like, hey, can we give a broadening rally?
Right.
Hey, small caps look super cheap versus large cap. If you look at our last couple of weeks, we've written about this. I just don't think the small caps are that cheap because when I parse it out by growth versus value, growth looks a little expensive for both small and large. Value looks cheap for both. When I parse it out by quality, the mega cap quality are just much better than the small cap quality. They generate more free cash flow. They have higher margin. They command an asymmetrically higher multiple. So I don't think you get that broadening rally until we're closer or more in the downturn. When I don't know, the old blood on the streets phrase, like you really need to have things much worse. Then you could dream that their margin expansion that after that will be better. In the interim, I think the big guys, we'll see with some of them in an hour or two here, are probably going to have just as good results, if not better, than the small caps. And what makes small caps work is their margins go up more. So which is it? Is it labor? Is it materials? Is it depreciation? Is it pricing and mix? None of that looks like a great cocktail in the next quarter or two on a relative basis. So I'm in the camp that the market goes up and the big seven participate at least pro rata.
Yeah,
at least that's my view.
It's pretty hard for it to be otherwise.
At least for now.
Mathematically. Yeah, agreed. Let's bring in CNBC contributor Bryn Talkington of Requisite Capital Management for more on this. And Bryn, just in general, I mean, I know you're an owner of things like what Microsoft and NVIDIA. How do you think they are positioned as we're about to get this latest little update of fundamental news?
Well, I think when I start with the technicals, if you just look at the NASDAQ is firmly below both the 50 and the 100-day and continues to make those lower highs and lower lows. So technically, the NASDAQ in general doesn't look good. There's a few standouts like a Google and a Meta, which look the best, we'll say the Magnificent Seven from a technical perspective. So I go into Microsoft's earnings today that when you look back the last 2 quarters, to me, the key word that Satya and team talked about was optimization, meaning that clients have been optimizing their spend, meaning to me spending less. While last quarter we definitely saw with Microsoft, the CapEx is picking up, mostly going to AI. And so I think you have this somewhat of a juxtaposition that overall, the clients of Microsoft are optimizing while Microsoft is spending for the future. So they're going to spend more today to try to earn more in the future on AI. So I know that the street's looking for about 8.7% revenue growth. I don't think that Microsoft's earnings today are going to be the catalyst to get like the tech trade back up and running. I agree with Adam to say if we get a rally November and December, I think tech will keep up. But Mike, when I look back, Microsoft is flat over the last 2 years. So although we love to talk about the year-to-date performance of some of these tech stocks, if you held Microsoft from November of 2021 to today, you're flat. So I think you've really just seen a reversion and a kind of a catch-up of being at that high in 2021.
Yeah, there's no doubt. I mean, look, if you look at a longer-term chart, it looks like it could easily be this big double top. It kind of went right up to the old highs over the summer, and then it's pulled back from there. On the other hand, over the course of those couple of years, it's gone from like a 34 forward multiple down to 28. I mean, it's not cheap. But on some level, it seems like Microsoft for a while was almost the most important mega cap in there because everybody could make an excuse to own it for a while, right? You could be defensive, you could be a growth investor, you could essentially be playing the AI theme or just saying these are really good managers and I'm just going to get in the way of every digital trend that's out there. So how do you think that that works from here?
Yeah, well, I mean, if you think about investing for the future, ultimately the yield curve doesn't matter to companies that are executing and can grow through a cycle. I think with Microsoft, on the positive side, you have Satya and team that continue to execute. I mean, he is very underrated, I think, in his dominance of AI. And you also have Microsoft. It's definitely the closest publicly traded company to OpenAI because of the relationship they have. And so I think that investors are going to continue to own Microsoft in that AI bucket. And also, don't forget, Copilot in earnest launches the first week in November. So while it's not going to even remotely be embedded in earnings or revenues for the foreseeable future, I think there's going to be a lot of excitement talking this quarter and next over how Copilot's being adopted by all of us that use Microsoft. So I still think it's a great long-term hold, but ultimately I don't think this quarter is going to separate itself and you're going to see a big run outside of just the market's run itself because of these earnings this quarter.
What do you say, Adam?
Yeah. Hey, Bryn. Nice to see you. Yeah, I largely agree. I mean, look, I don't love the November 21st comparison just because that's when, like, the peak of, you remember, we didn't start raising rates till March of 22, right? Yeah. So that was really the peak of people anticipating higher rates, Fed fund futures going up a ton. And so a lot of the NASDAQ got killed. Yep. But I think, and Bryn knows this, I think a lot of it just comes down to your investment horizon, right? If you're saying 5 years from now, I would like to have looked back and had something in my portfolio that benefited from AI, you have to own NVIDIA and Microsoft. There's no way you can get around owning those two. They're the best position. And I'm sure Anchor will talk about this next. She knows a ton about it too. So I think you'll want to own it. Whether you get, upside enough, they didn't have upward earnings revisions their last report at Microsoft, and most of the other mega caps did. So whether you get it here, I don't know. But surely they're well positioned to benefit if you look out 1, 2, 3 years. And you can start sketching out a scenario where they earn $20 in 2, 3 years, and you're going to pay 25, 30 times that. So is this going to add another $1 trillion market cap before it loses $1 trillion? Of course it is. And so it's all investment horizon. I don't know about the next 2 months, but I know you want to own that for 3 years.
Yeah, probably not the trillion in the next 2 months. But Bryn, you mentioned Microsoft investing for the future heavily as its customers try to trim back. This is an area of sensitivity, I think, along the street with a lot of these companies. Meta, everyone fixated on what the operating expense guidance is going to look like. Even Alphabet as well. So there's sense out there that, yeah, there's this great long-term opportunity, but in the meantime, we'd love for you to be maximizing margins. How does that play out?
Well, I think, last quarter, they're spending a lot on CapEx. I think they're going to, as I said in the beginning, they're going to continue to, while their clients are optimizing, they are not, because they're investing for 1, 2, 5 years from now. But I do think, though, we all understand Copilot is going to be $30 a head. So you can do some math and actually see over the next 1 to 2 years how that actually trickles down to revenues. I don't think with the other companies that's so clear. And so I do think between the very close relationship they have with OpenAI, Copilot being $30 a head, which you could model out, and I think if there's broad adoption, that gives another runway for Microsoft over the next few years.
Yeah. You know, more broadly, Adam, I mean, I was noticing the way ExxonMobil and Chevron traded lower after making these acquisitions. A lot with an acquirer. Crude has also been a little bit, in pullback mode. But it seems like these companies in particular cultivated a shareholder base that says just kick the cash back to us. You know what I mean? Like, that's what we want right here. So it's a tricky thing for management. And I guess if you want to know what you own, whether you own an empire builder or you own a shareholder return focused management.
Look, I mean, in the near term, you never like that kind of price action. Very tactically, you kind of hope that when you buy something, that the market likes it. And I think they're getting assets at a pretty good price. They pay pretty low premium, like if you look at the Chevron Hess situation. But any medium or long-term view, I believe you should own a lot of energy and energy stocks. Demand looks to me like it'll be very steady with the look at the installed base of vehicles and new vehicle sales, and capital spending is top left to bottom right. It's just very hard to call on a 3 to 6 month view. You can have a lot of random things happen. But I think the probability that we have demand above supply for oil is very high in the medium to long term. So I would recommend investors own as much energy, equities, or actual direct resources they can. It's one of my 2 highest conviction ideas for our institutional clients.
Bryn, you're probably along for that ride to some degree, or you're not.
From Texas,
what's your thought about how these deals play into the longer term story?
I think these, we're very exposed to energy. And as a long-term investors, it's great to get the cash back. I get your point, Mike, and I agree with that. But ultimately, I think with both of these, Pioneer and Hess, Exxon and Chevron are saying 1 + 1 can equal 3 here. And I think that what we're seeing, if you look at Ford and GM, people don't want to buy EVs in aggregate. They want to buy a Tesla. Okay, they're wanting to buy an experience. And so I think that these companies are getting a read from the street. I promise you, fossil fuels will be here 5 decades from now. And this whole peak oil, we're going to all go solar, all go green. I think that narrative is taking a backseat to the reality of how expensive it is to go green. And people still are not going to have large adoption to EVs. I think they're going to continue to buy Tesla. And this is where, to me, that narrative for companies with high free cash flow, high shareholder return squarely sits in the energy camp. And so I wholeheartedly agree with Adam's view.
Yeah, I mean, look, there's still a cigarette business, and they still make a lot of money.
Last year was the biggest coal production and coal, demand ever. So this peak oil demand is going to be several years from now.
Yeah, I get it.
Yeah, so
but like the oil intensity of GDP is going nothing but down, and has gone nothing but down forever. But that doesn't mean in the absolute terms demand goes down.
We care. Just to be clear, I'm not talking about the environment.
Understood,
I'm talking about the stocks. They're cheap with low estimates, low inventory, tons of free cash flow, and everyone hates them.
Yep.
That's a cocktail that looks good to me every time.
Everyone hates them -2.
Yeah, besides Bryn and I. But I'm saying a lot of investors can't own them, or they won't own them. And so there's opportunity, I think, more for us.
Fair enough.
Yeah.
All right, Adam, Bryn, good to talk to you. We'll catch up with you again soon. Let's get to our question of the day. We want to know which of this week's reports will have the biggest move post-earnings. Alphabet, Microsoft, Meta, or Amazon? Head to @CNBC Closing Bell on X to vote. We will share the results later in the hour. We're just getting started. Up next, your tech playbook. Alger's Anchor Crawford is breaking down her expectations for the parade of mega cap earnings ahead. She will join me at post 9 after this break. S&P 500 up near the highs of the day, up about 80 basis points. We are live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
sooner.
The NASDAQ higher as heavyweights Microsoft and Alphabet gear up for earnings after the bell. Here to preview those reports and Meta's later this week is Encore Crawford, Executive Vice President and Portfolio Manager at Alger, joins me here. Good to see you.
Good to see you too, Mike.
So we often talk about these stocks as one big blob, the Magnificent Seven or FANG or whatever it is, as if there's similar kind of energy sources driving them, as if the same things matter to all of them. Not always the case. So as we sift among the ones reporting this week, what matters?
I think what matters is different for every single one of them, in part because the end markets and the operating expense discipline is all different for each one of them. So for Microsoft, what's going to matter is, do they see stabilization in Azure or their cloud business? How do they think about, or how are they guiding us to how AI will ramp with the introduction of Copilot in Q4 and then 2024? For Meta, it's going to be all about OpEx.
Yeah.
They seem to have a great revenue. We expect a revenue beat and probably a raise. But what are they going to say about their OpEx? Do they go back to their ways of, pre-COVID, where they spend willy-nilly, or do they maintain the discipline? For Google, a little bit different. Google, it feels like, what is a product cycle? We're looking to see if they say anything about AI that can help us bridge the gap in a more uncertain economic environment for a product cycle. So I think it's different for each one, and so you may actually see a bifurcation in the reactions of each one of them.
When it comes to Microsoft, there's the, obviously in the Azure business, that's a matter of, is demand settling out, are margins, going to be stable for a while. But in terms of what they're doing with AI, with Copilot, so there's the, we're going to sell X number of subscriptions, seats or whatever, but also it's how are you running your business differently, presumably, your own business with all these tools?
Yeah, so it's funny because I think the software companies are not only the enablers of this entire AI revolution that we are embarking on, but they also are eating their own cooking. So to some extent, they are increasing internal productivity. They're seeing how much productivity is increasing, and then they're selling it. So they actually get a benefit from both sides, whereas the rest of the market will benefit from the productivity increase. Some of these software companies will see a massive increase in pricing power, in part because they're enabling that productivity increase.
Yeah. I guess there's not a real handy way for investors to say, we're just going to play that trend. So therefore, they go to the providers, right? But do you think that as people look at other businesses, as those companies adopt, whatever these productivity enhancing tools are, that it actually is making its way into earnings models and things like that?
I think that is going to be we want to establish itself, and in part because these changes take time. However, it takes time relative to the business model that we have on Excel. In the grand scheme of things, I think by the end of the decade, we will probably see 40% penetration of Gen AI or AI type products into mass market. Every single company will have to adopt this. It's a structural imperative at this point versus it being a choice.
You mentioned for Alphabet, one of the questions is what are they going to be able to tell us in terms of their position here and whether they're going to get payback on some of their investments. But as a business right now, it seems like they had a little scare. The street thought that they were going to be kind of a victim of the AI movement, and now it's back up toward its highs. It seems like it's kind of a consensus hold again.
Yeah, and oftentimes I think, consensus is consensus.
Yeah, right.
And oftentimes what you have to do is look beyond this quarter. So they're going to be reporting in 30 minutes. And we're kind of looking forward 6 months and saying, the economy is a little bit unstable. The 10-year is over 5% or close to 5%. The consumer is looking a little shakier than it has historically over the last few years. So the end market is advertising, which is driven by the consumer and the economy. And because Google, unlike the other Magnificent Seven, they don't have a product cycle that bridges them through this uncertain environment, it becomes a little bit, a little bit more difficult to own relative to the other two that do have their product cycles. And I'm looking over 6 months. I don't know what happens tonight.
Sure. So does that imply something like a Meta? I mean, all this focus on the operating expenses, that's because people just take for granted that, you know, that advertising engine keeps spinning?
Well, it's not only the advertising engine that Meta has, it's the product cycles underlying their core advertising engines with Reels, with Direct to Connect, with the AI platform that they've just recently introduced, and the monetization of all of these, that is going to drive the top line. But we just have to make sure that they don't spend it all away.
Yeah.
So we actually realize it in free cash flow.
Yeah. No, that'll be the focus. And I don't know. Last time people panicked about the spending at Meta, created a really good buying opportunity, but much lower. So we'll see how it goes. Ankur, great to see you. Thanks so much. All right, up next, trading the uncertainty. Bank of America's Chris Hyzy is highlighting the 3 sectors he's seeing strength in right now. He'll break down how you should position your portfolio after this break. Closing Bell. We'll be right back.
Everything.
Welcome back to Closing Bell. The major averages in the green today as Treasury yields stabilize ahead of a flood of earnings reports. Here to share where he's finding opportunity in this current market environment is Chris Hyzy of Merrill and Bank of America Private Bank. Chris, good to see you.
Great as always to be with you, Mike.
You know, how are you seeing the, I guess, the big picture action? You could have said coming into this week, markets maybe getting a little bit oversold. We're at a better seasonal period. We're near some kind of potential support levels. Maybe the yields can calm down a little bit and make way for something good seasonally as we focus on earnings. Does that make sense? Are you persuaded by the action today at all?
You know, I'm not traditionally this stark as it relates to what this week actually means, but this is a big week. The Magnificent Seven, the narrow leadership, has been the news headline for a while. That passed the baton over to the 5% yield on the 10-year Treasury, and then bouncing off of 4,200 on the S&P. And there's so many cross currents, not to mention the significant rise in geopolitical volatility and risk overall. So this mountain of earnings this week, particularly in the tech sector, that has to drive some momentum and a little bit of tailwinds and some catalysts to get some of that, I wouldn't call it risk on, but to get some of that move back into the equity markets to establish these long positions again, to set ourselves up for next year. So this is a big week.
What are we being set up for into next year, I guess, is also the question. It seems as if, we're a year after there was a near unanimous consensus that there was a recession coming within a year. We didn't get it, but it still feels like you're kind of rolling our anxiety forward every few months that, in fact, finally there's going to be some kind of an economic payback period. What's your assumption at this point?
Well, certainly the assumption is that it's a mixed bag. There's going to continue to be cross currents. The great debate, we wrote this report not too long ago, talks about, is it soft landing or is it any kind of landing? And for what it's worth, I think if you talk to businesses, if you see what's going on, generally speaking, in the forward-looking projections, what gives us some comfort is the fact that, albeit there's slower spending at the consumer level, and there's a little bit of relaxation of growth overall, we're not in that mode where we're falling down the cliff yet. The Fed hikes that we've already seen are beginning to bite, but there's tremendous resiliency out there. So what gives us comfort, Mike, is the fact that profits could actually reaccelerate next year. Now, the question still is out. Did we actually bottom in earnings? Some think we have. I think it's still a little bit of a mixed bag. But overall, when you look at next year, it should be that platform year again, more normal yield curve, more normal economic activity, and the thinking cap that goes on investors' heads should be more about the latter part of 24, 25, and 26 to establish that long-term sustainable bull market again.
Yeah, I mean, it's a good ways to look ahead, although we'll see if people can maybe use that as a frame. Now, where within the market seems like it makes sense to try and position as we head into something like that?
Yeah, I think if you look at market internals, we all know that you talk about the 493 other stocks and how attractively valued many of them are. And even when you take a look at the cyclicals, how attractively valued they are. And dare we even talk about small caps on a relative and absolute basis, and emerging markets. There's so many ands. But thinking forward, when you think about what drives long-term sustainable bull markets, eventually you got to look through the storm, the wall of worry's high. When you get that blue sky, it's almost too late. So you stick through it, you be diversified, you stay high quality right now. But overall, it's productivity, it's a resumption of the profit cycle, and it's ultimately falling yields, not collapsing yields, but falling yields, which helps support that better attractive foundation in stocks relative to fixed income. We'll touch on fixed income very quickly. A more normal yield curve is on its way. There's some pain on the way, and it's probably pain that's been extended longer than most people expected. But where real yields are right now, fixed income is also attractive.
And you're not concerned necessarily that when you do get the yield curve return to a more normal shape, everyone says, well, that's another building block of the eventual recession?
Well, not if you're coming off of the severe tightness of overall policy and you're starting to come down. And if there's more normal monetary policy where rates come down a little bit on the front end, after the back end starts to look through and see slower growth, then you get a more normal yield curve, something like 3.5% Fed funds, 4.5 to 5% 10-year Treasury. That's the 1990s. And we had very good years overall across asset classes in the 1990s. They weren't absent of volatility.
Sure.
But that's more normal than post-global financial crisis days of low rates, low inflation, quantitative easing all the time.
All right, we'll see. The Fed seems to be in no mood to cut almost 2 percentage points anytime soon, but things happen. We'll see how it goes, Chris. Thanks very much.
Thanks, Mike.
All right, up next, we're tracking the biggest movers as we head into the close. Christina, standing by with that.
Verizon having its best day since the great financial crisis. And slow demand offset by higher prices from one conglomerate yet again. I'll have that name and much more after the break.
Twenty minutes until the closing bell. We have the Dow up about 240, the S&P up 0.75%. Let's get back to Christina for a look at the key stocks to watch. Hi, Christina.
Let's start with 3M, higher after beating expectations on earnings and revenue. The conglomerate also raised its earnings per share outlook, citing its restructuring and spending control efforts. Plus, it raised prices. Those shares are up 5.5% today. General Electric is also in the green after handily beating estimates and raising its forecast, thanks in large part to increased demand in its aerospace business. Shares of GE are up almost 7.5% right now. And last but not least, Verizon is having its best day since 2008 after growth in wireless subscribers fueled an earnings and revenue beat. The telecom giant also raised its free cash flow forecast for the year. Shares up about 9%, but still down 13% this year. Mike?
Christina, thank you. Another name we're watching this afternoon is GM. This as the UAW expands its strike to a crucial GM plant. Phil LeBeau here with that, Phil.
This is a big plant and a big hit for General Motors. You're talking about the plant in Arlington, Texas, where they build all of their large SUVs. Let me give you some perspective on just how important this plant is. About 5,000 UAW members have walked off the job there. This is 20% of GM's U.S. production. It is the largest, most profitable plant they have in the United States. Not surprisingly, this is news that does not fit well as they come off of an earnings report where they said, look, we're already going to take an $800 million hit from the UAW strike, at least $200 million a week going forward. And that was before the Arlington announcement came out. They've pulled back their guidance completely for the year because they don't know how much the cost will be from this strike. Here's CEO Mary Barra during the conference call talking about the state of negotiations.
The current offer is the most significant that GM has ever proposed to the UAW. They've demanded a record contract, and that's exactly what we've offered for weeks now. A historic contract with record wages that have increases that are substantial, record job security, and world-class health care. It's an offer that rewards our team members but does not put the company and their jobs at risk. Accepting unsustainably high costs that would put our future and the GM team members' job at risk is simply something that I will not do.
As you take a look at the big three shares since the beginning of the year, GM, Ford, and Stellantis. Keep in mind that we will get Ford results after the bell on Thursday. And Stellantis, remember, it had a plant that was hit yesterday by the UAW, or on Friday by the UAW. They're all kind of running together. They will now have 525 workers that they are laying off. This is the ripple effect, Mike, that we've been talking about. More than 7,000 workers between GM, Ford, and Stellantis have been laid off because there's not work coming from a plant where there was a strike or is a strike going on. That shows you that this goes beyond the people who have walked off the job. It is impacting others at plants that are still in operation, though at a reduced rate.
Yeah, and that'll certainly start making its way into the broader economic numbers. You know, GM stock peaked today around 10 a.m. after those earnings. It's down like 4% since then, as we're talking about this new plant closure, Phil. So, I mean, the question again, I mean, does this seem to just get everybody else dug in the same positions, or is it moving the process along at all?
Two arguments here, Mike. You will hear people say this is an indication that the UAW sort of flushing it out towards the end, that we might be close to a resolution, if you will. But I get no sense that this is, you know, we're going to see something announced within the next week or so. I just don't get that sense from talking with people who are close to the process. And one other thing to keep in mind, Mike, GM shares also under pressure because of the news out of California with the DMV and Cruise. Cruise in the future potentially could be a big moneymaker for GM. This is not good news coming out of California. If you buy into the idea that Cruise and autonomous driving will really help GM's bottom line.
Yeah, excellent point, Phil. Thanks so much. All right, last chance now to weigh in on our question of the day. We asked which of this week's reports will have the biggest move post-earnings: Alphabet, Microsoft, Meta, or Amazon? Head to @CNBC Closing Bell on X. We'll bring you the results right after this break. Let's get the results of our question of the day. We asked which of this week's reports will have the biggest move post-earnings, Alphabet, Microsoft, Meta, or Amazon. Microsoft in the lead, the largest of them all. 30% of you said that's going to have the biggest move. Amazon right behind it. Up next, your earnings setup. We're breaking down what to watch when Alphabet, Microsoft, Snap, and Visa all report in overtime. All that and much more when we take you inside the market zone.